Hello, how to fill out Form 1120S for your S Corp. So how to fill out Form 1120S and Schedule K-1 Form 1120S for 2022. So to fill out IRS Form 1120S, you will go to IRS website, and 1120S is filed by L.L.C. tax as L Corp or by S Corp. So on the IRS website, you'll tap Form 1120S, and you will download Form 1120S, instructions for Form 1120S, and you look for Schedule K-1 Form 1120S. You'll download them and you'll save them under your business tax folder for 2022. So I downloaded those forms, so we can go find them. I can just click on one. Form 1120S. In fact, instead of, yeah, I think I'm going to copy it from here, and Schedule K-1. You can just click on the download to download it, and then you go back and click on Schedule K-1 and then the instructions as well. But since I already download them, I'm going to copy those two to our folder, and I'm just going to paste them in the now tutorial folder. Okay, so to complete Form 1120S, there could be some other form that you have to complete first, depending on your business model. So I have a checklist, and also if you cannot find your form on IRS, if you go to our website ninasoap.com, in the sidebar you'll find federal tax form and instructions, and when you click on it, you will find a list of links to those forms that when you click on it, it will take you back to to the form you have downloaded from IRS website. So that's another way of getting to those forms as well. And we have free templates and worksheets as well. If any will be useful for your business, you have access to them here. So when you are filing Form 1120S, or before you even start filing, there is some form you might need, and there is your own worksheet that needs to be ready. So I have a checklist, and the checklist, if you are interested in it, you can find it at liberdownload.com. You can purchase it from there, but it's just a checklist of different things you need to get ready before you can feel like you are ready to file Form 1120S. And one of those things will be your bookkeeping should be up to date. Your inventory should be up to date, because if you are selling physical products, you might have inventory to manage, and you should have that up to date to be able to calculate the cost of gold that you sold during the year. That is the cost you are going to deduct, not the full inventory cost. So, and so I'm not going to talk too much about the checklist, but we might refer to it if we have to. So now that we have this form, let's try to complete it. And I will suggest you download the instructions. And if there is a line that you don't understand well, it might be a good idea to look for that section in the instruction and read it through. So we are going to complete the form, and this video or tutorial might take a little bit long. Might be long. Okay, so as a business owner, if you are going to file Form 1120S by on yourself, which you can, if you want, you can use a tax software. It might make it a little bit easier for you, especially if you have a lot of expenses and different form needs to be completed. Instead of entering your business name, your EIN number on each one of those forms, the software will save you time by doing those things for you. So, and if you have to duplicate a number on multiple forms, once you enter the information, the software responding on the question, the software will know different forms that data should go. So it will shorten the process for you. If you do not have um, a lot of data to enter on your phone, and you want to save money, you'll be able to do that by hand. So little bit I'm trying to look for an information here so that we can start. That way I'll show you how I can complete it by hand and how I'll be referring to the instructions to support why I'm putting some numbers or some information the way I'm putting it. So what I'm trying to look here is where the form started, because before that they have some information that you can read to get yourself up to date. But then I have some information here. So we'll go back to our form, and so it's for 2022 that we have. Why am I downloading 2021? So I'm in the wrong folder. Let's see. Yeah, 2021. Let's go to 2022. We have 1120S Schedule 1. The instructions, I have that open already. And we are looking for Form 1120S. Okay, so I'm going to copy those two, and I'll go back to our tax return folder, and I'm going to take 2021 form. I'm going to delete them because we want to use the right tax return form. So now we are going to open 2022 Form 1120S. Okay, so part one, S election effective date. So S election effective date might be different from date of incorporation. So if S election effective date is the date IRS approve you to start filing S corporation for your LLC. So if we have this example open, we can just copy the date in this example and we can paste it. So B, business activity code. So how to find your business activity code. I'm going to have a video to talk about that. If your business is not the first year this year and you have been using a business activity code for your business because you have filed prior years, you might want to check the instruction to see if the code changed, especially if you are an online business owner. So we are going to go to the instructions. We'll come back to this page 13, but I'm going to tap in page 50. So you'll find IRS business activity code on page 50 of IRS instructions for Form 1120S 2022. So what the code was in 2021 is different from 2022. And if you are an online business owner, you are a non-retailer. And IRS used to have some code at the bottom of retail trade for non-store retailer. Non-store retailer just mean online. But for 2022, they took those numbers, those code off. Even though NAICS is still using those code, IRS took them off. And I believe before they have retail trade stores as well. So they have stores and then they have non-store retailer. So they code under retail trade before because we are under retail trade. Page 50, you will see retail trade. It used to have stores at the end of those business activities, taros, if I will call it like that. And then all the way, like when they say general mechanized retail, you might say retail store, something like that. So, but they took those stores from the end of those taros so that it can apply to business, to physical brick and mortar businesses and online businesses as well. So if you start your business recently and you have been using online store, non-store retailer code, those codes don't exist anymore for IRS tax return purposes. And they have a note there. They say non-store retailer see all type of merchandise such as, let me make it a little bit bigger so that you can read it yourself. But pretty much what they are saying is you need to look through the code they have to see which business you need to know, if you have different type of business activities, the one that is your main business activity or the one that is generating more revenue for you, they want you to go through the code to see what code correspond to that business activity, and that's what you should be using even if you are selling 100% online. So, and they gave an example of the pharmacy. So for that reason, if you are looking for your business activity code for filing taxes, might be a good idea to go with the new suggestion that IRS has in their instructions. So depending on your business activity, you might need to change the number if your number is not here anymore to what will qualify for you. So if you sell multiple things, you might choose that fit within different type of category. You might choose a code that you think is better suited for you. So I'm going to go up so that we can read the meaning of how they describe, how the guide they gave to help you choose. So pretty much what they are saying is, even though they say they are based on the NAICS system, NAICS is still using the old code for non-stock retailer when IRS is not. Starting 2022, tax return that we are preparing now in 2023. So pretty much what IRS is saying that using the list of activity codes below determine from which activity the company derive the largest percentage of its total receipts. Total receipt is defined as the sum of gross receipts or sale, page 1, line 1. So page 1, line 1, it will be your tax form 1120S. So when you have your total revenue, if you have multiple business activities that total to that amount, the activity that is generating more, they want you to base on that to choose the code. So they use page 1, line 1A, all other income, page 1, line 4 and 5. So line 4 and 5, income reported on Schedule K, line 4, 5A. So interest income, line 4, 5, and 8. So if you have income coming from those, if you have income source coming from those categories, and they have 4, 5, no, 4, 5, 6, 7, 8, 9, 10. So they have those different, how did we come to the beginning again? Let's see, 6. Royalty. So yeah, pretty much the income section of Schedule K and the income section of Form 1120S, page 1. So if you have income coming from different sources, the one that has the largest percentage, they want you to use that to guide you to choose the code. So if the company, and then they gave an example. So, and the same thing goes to rental properties as well, because they have Form 1120, Form 8825, line 2, 19, and 20. And that's rental, um, is for real estate form, if I recall right. And this will keep coming, bringing it back here. And Schedule K, that form will go to net rental real estate income. So that will go on line 2 of Schedule K. So, but they are referring to the form to some specific line. Yeah, on that form 8825. But pretty much now they are giving you an example that if the company purchase raw materials and supply and then give them to another company to produce finished product for them, that company, not the second company, but that company that purchased the raw material but hire another company to produce the finished product with those raw material, that company that purchases the supplies is a manufacturer and should use a manufacturer um, code. But anyway, based on NAICS, if you produce products and then you sell it to the end user of your products, you are a retailer, not a manufacturer. Have read about it some years ago. So, but anyway, you have the choice between manufacturing and retailing to choose from based on what you are doing. And you will choose the code. If you are using a code before, that is not in the system for IRS anymore. So, but for the code we are using it now, example here, I'm going to use that code and I'm going to show you what code it is. And we will go to the code section. I believe that code that I'm using is what, 54, right? Okay. Okay. So for some reason, the screen just went blurred for a while. Okay. So 54, let's go down. Okay. The number I'm using in my example is tax preparation service. And I can just give you an example of my case. Liberman Consulting L.L.C started as a tax preparation business, and I have other businesses as well. Like Nina Soap was a handmade product. It was an a sole proprietor business, and then I have the tax preparation business. And now I combine both under L.L.C, under Liberman Consulting L.L.C. So I'm kind of tempted to change the number, but I have discussed that with my lawyer before because I went and saw him to ask him if he can create a C corp for us. And I, because I wanted to have a mother company where all the other companies will be underneath it, and he advised against it. And when he saw all the different businesses that I have, he suggested that I combine my handmade and the tax um, business together because they are active businesses, so I can combine them, because he was trying to filing all those tax return will take a lot of time. So, but my reason of doing it was different because my tax knowledge came from a prior work experience. And while I was still working with that company, I know that I wanted to pursue my tax, the tax business, but that job was a seasonal one, winter. So even when I renew P10 every year, I didn't put that business information in my P10 application. So I will renew the P10. P10 is a number you use to file taxes. So you renew that with IRS. So I will just renew that as myself. So, and when I left that job, because I find another full-time job, I work with them few season again because they kept calling me back. But in the uh, fine print, you cannot leave them and start your own. I think they have to have 2 years of gap between working for them and working for yourself because they are afraid you take their clients. So, and I just said at some point to myself that I cannot keep going to them if I want that clean cut. So, because the manager will say that, well, since I have the business back then, but I was not filing taxes, and the manager will say that, well, since I'm not filing taxes, I can still work for them. But I just know that I need that clean cut, and at some point, I just stop going back to them so that I can have that clean cut. But within that time frame, I realized that I was not sure I want to bring client home to file their taxes, and I'm not sure I want to go to client home to file their taxes. I can go to their business place, but I didn't really. I think I didn't really think things through. So, and then I have kids that were very young, so I didn't really file taxes for people, but I'll answer tax questions for my coworkers and my supervisors. So, and I was thinking maybe I should hire a place outside of my house to go, but I wanted a home-based business. So while I was thinking about those, I decided to create different type of business entities for each type of activities that I'm each type of my ventures, so that I can keep filing those taxes myself to keep the knowledge alive, that I can, so that I don't forget everything that I learned while I was working there, because I found that I like taxes a lot, and I would spend my time reading IRS publications, and that helped me um, develop a lot of knowledge in the subject, and I wanted to continue. So I have thought about going to law school to have like CPA and tax law, and I read some NOLO, NOLO. I like those lawyers' book. I read it to see the difference between the two, and I noticed that tax enroll enroll agents might be more suitable for me because it starts focused when CPAs are accounting focused, and I already have business degree with I took a lot of accounting classes during my first master's period, and it's not really what I was looking into. And CPA is more state license as well, but enroll agent is you can file tax anywhere within the US. So I like enroll agent, and I think tax lawyers, they are more, or tax attorneys, they help you settle issues with IRS when you have to go to court. And it was not really what I was into. So that helped me knowing the difference between tax lawyers, CPAs, and enroll agents. And I think enroll agent was more what would best fit what I wanted. So, but in the meantime, I have sole proprietor, I have L.L.C. that will file 1055, and then I have 1120S Corp. L.L.C. tax as an S Corp, and I was looking into Form 1120 for C Corp when I went to my lawyer, but he didn't really know the reason why I was doing that. So he was just looking like I would have a lot on my plate, and decided that I combined the superproprietor Schedule C with my 1120S, and advised against the C Corp. So, and for the C Corp, I wanted him to create it for me, since that would be a little bit more tedious, and I didn't want to do the research and file that with the state myself. That's why I went to him about it, but I asked more questions and learned more things from him as well. So, and while we are during that session, I asked him if I need to change my business activity code for my S corp, since it's not going to be tax preparation anymore. And he said, no, I can keep it because it's a way IRS track those, categorize those businesses, and I don't have to change it each time, the business activities that generate more revenue changes or something. Or when I add another business activity in it, I don't have to keep changing it. So I can just keep it. So that's why I keep using it. And later on, when I start YouTube, I start um, sharing different things that I was doing, and I share about how to file tax return because I was filing taxes, and I noticed that many of you got interested in it, and then I add that to my schedule as well to do that every year. So by looking back at all of that, how coworkers will ask me tax question, how online uh, my videos on tax return perform well, I think that tax preparation, I'm still trying to figure out what I will do with it. But I just don't want to bring client home to file their taxes. So I figured out through YouTube videos and through coworkers asking questions that I like helping people filing their own taxes rather than me filing it for them, because I have a job, a full-time job, and I do not want to create a source of income that is tied to my time anymore. So therefore, helping people filing their own taxes, I'm still, keeping my knowledge up to date when I'm recording videos showing how you can file your own tax return. And then people ask questions and then I answer because I had to read the instructions to keep my knowledge fresh again every year. So sorry about uh, getting off topic, but I just want to explain why I will keep using this number in this example, even though we will see some different type of activities, revenue that will be used here. But as of you, if you have different type of business activities, IRS has the guidelines, how they describe how you you will use which activity that is performing better in your business to choose the code you are going to use. So the choice is yours, whichever works for you. But so now I'm going to keep this business code, and let's go to the right and complete the right session. So employer identification number. So you'll enter your business identification number. Date incorporated. That's the date you file your L.L.C or your S corp, whichever you file with your state. Like in this example is L.L.C that became a S corp for tax purposes. So if you file your L.L.C with your state will approve that request and will have a starting date. The starting date of that approval is what will go on Form 1120S line E. So I'm going to copy the date we have here and I'm going to paste it. Okay, so total assets. Well, they say to see instructions, and so sometimes you might be required to complete, sometimes you might be. So again, it will be good to go to the instructions, and that's how you will use the instructions to locate things you might have question about. So into the corporation total asset as determined by the accounting method regularly used in keeping the corporation books and record at the end of the tax year. If there is no assets at the end of the tax year, enter zero. So they want you to enter a number there, zero. So that means it's a requirement to complete that item F. So if the corporation is required to complete Schedule L, enter total assets from Schedule L line 15 column D page 1 on page 1 item F. So and then they have see instruction for Schedule L later. So well, pretty much what Schedule L is the balance sheet. So since that asset session is required for us, we need to find it. So therefore, it's a good idea when you have L.L.C tax as an S corp, you have a balance sheet for yourself. So let's go to our example here, and I'm going to show you an example. Oh, I think I have it open already. An example of a balance sheet. And this balance sheet is just a little bit like the one on the schedule, the one on Form 1120S. But yeah, you can copy the one from Form 1120S and have it in a worksheet that you can try to complete every year for your business. So we are going to take this number, that's the assets portion. So the checklist for Form 1120S, we have a balance sheet there as well to update your balance sheet. So to update your balance sheet, you have to have your inventory up to date. You have to have your bookkeeping up to date. So the balance sheet will have the top part that will be assets, the beginning of the year, and then the end of the year. And what you have at the end of the year, at the beginning of the following year, you put it in the left column, and then at the end of that year, you complete the right columns. And then at the bottom, you have the liability. So if you enter, I don't know if I'm going to spend a lot of time on the balance sheet, but I have good knowledge of the asset portion, but not much on the liability and equity share, shareholder equity side. Maybe we'll come back to it, but pretty much you want the total of the liability to be the same as the assets. The beginning year should match the beginning year for both, and the end year should match the end year for both asset and liability as well. And what was on the right section for last year will go on the left section at the start of this year. That's the way it works. So there is not much to say on the liability section. If you owe, you can enter. Pretty much what I put on the account payable is the Form 11, no, employment tax return and unemployment tax return that I need to pay IRS. I have now is due by January 31st. So with this example as cash method, I don't want to deduct an expense that I didn't pay for during the year. So because I didn't pay in 2022, but I paid before the due date, but it was in 2023, it is an account payable. It's something I owe IRS to pay by January 31st, 2023, but for tax year 2022. So it is something I owe short term. It's a short term debt, loan, something like that, account payable. It's not really a loan, but you get the idea. If you sold something to somebody and they have not paid you, that'll be account receivable, it'll be on top. But if you purchase something and you have not paid yet, that's a debt to you. That's an account payable if you are going to pay in a short period of time within a year. So I put that amount there. And so because it's still in the bank account, I want the balance sheet to balance. So I found a place for it. And pretty much the capital stock is, I like to use that for L.L.C that may not have stocks. I like to use that as the capital contribution. So that should match your capital contribution. That means your capital contribution worksheet should be up to date. If you contribute to the business all the year, you have to have a record for it. So I don't know, maybe while I'm talking about those, we can, let me see if I have it here, we can take a look. And I had to make adjustment to this balance sheet because in the past I put loss from the business inside the capital stock. but the loss should go in earning. Earning uh, could be a loss as well. It doesn't have to be a profit all the time. So there will be a spreadsheet like this to purchase from liberdownload.com, but you can design your own and just track how much you have been contributing toward your business throughout the year. And and that capital stock, I want that to capture the full contribution toward the business. So I had to make adjustment and move the difference to retain earning instead of putting prior year loss inside the capital stock. So, and pretty much I'm using the return earning to balance assets and liability. So if there is any difference, I want that to be inside return earning so that my assets total can match my liability total. And return earning is just earning that you didn't distribute to shareholder in form of dividends. So you keep it in the business so that you can use it to, like, its profit from the business is where you is what is reflecting how your business is performing. So the profit from the business, is going to be reflected on the retained earning. If you pay a dividend to your partners, it will lower that section, I will think. But again, let's go back up and see our assets here. So that means to be able to complete Form 1120 S item F, you need to know your assets. And how do we come up with that 11A 7256? Well, you need to check your bank account to know how much you have at the end of the year. And by the way, we will, if you do not have an accounting software to do your bookkeeping, you can do it with a spreadsheet. We will have a free download of bookkeeping worksheets in at ninasop.com that you can download and use. So when you go to your bank account, and I will have another video that will show how to use this spreadsheet. Maybe throughout the year I will use it a little bit to show you how example of how to use it. But anyway, when you open your bank account, your balance at the end of December 2022 should match your, I like to call it one entry bank account reconciliation. So should match this tab for you. So that number, it is your cash to put on your balance sheet. So now inventories. Again, your inventory needs to be up to date. So your inventories, it is an asset. So that means you need to go to your inventory worksheet, and we have inventory and sales worksheets for free at ninasop.com under free download. You'll find it under free download, and that's free download. Uh-oh. And it will be at the bottom. The newer version of template will be at the bottom because I don't want to go and drag it all the way to the top. So we have two versions there to choose from. It has the instructions, but I'll have a video to talk about them later. But anyway, so let's close the capital contribution. So the inventory, let's open the inventory and sales worksheet example that we have here to work with. And the bookkeeping, I don't know if I have the bookkeeping open. We should be able to find on the bookkeeping but is originated from inventory and sales worksheets. And when I'm showing how to use those worksheets, I won't probably show how that will relate to the tax return. The only time I will relate those two will be when I'm filing the taxes. So it's not this one like now. So it's going to make this video a little bit long because there is multiple documents of yours that you have to use to file your tax return. That will flow to your Form 1120S. And I have a video to show how to complete Form 1125A, Cost of Goods Sold, and I have a video to show how to fill out Form 45CC2, Depreciation and Amortization for 2022. I will link those two in the description as well, in the article or in the description below, so that you can look for those if you need to depreciate an asset or if you have inventory and you need to complete Form 1125A. But if you are using a tax software, the tax software will ask you questions, and based on your answer, we'll put those numbers for you. We'll complete or file those form for you. But it is good to understand those type of expense categories so that you can answer the tax software properly for the tax software to do the job you are asking it. So we have cost summary, like cost of goods sold summary sheet, and that has um, inventory at the beginning of the tax year and all of those. But I'm looking for year-end inventory because the balance sheet is doing year-end inventory, and that will be year-end inventory. So let's go to the, okay, you can see the number. I was about to make it a little bit smaller, but it's going to be a little bit harder for us to see both. But that's where it came from. It came from year-end inventory total. And that year-end inventory is taking inventory at the beginning of the year, which should be on the balance sheet. And when I did that, how to fill out Form 1125A, I talked about that $1 difference due to rounding that I was doing, and I had to adjust for it in the purchases. So the beginning of the year inventory, that means January 1st, 2022 inventory, which is January 31st, 2021 year-end inventory, will be the beginning of balance sheet inventory for 2022, and year-end inventory for 2022 will be the balance sheet year-end inventory. So, and that is taking cost of goods sold out of it. So you have the beginning of the inventory plus purchases minus out of inventories and minus cost of goods sold, and then you have year-end inventory. And again, this worksheet is free under free download at ninasop.com, and you don't need to sign up to access those free download and download a copy for yourself, and you can make adjustment based on what your business need is. Now that we know where the cash, what you should put on the cash, you know where the inventory should go. There is another portion of the balance sheet that might apply to you is depreciation. So if you have assets in your business, you need to know how much more you have left to depreciate. So the depreciation section of the balance sheet has your total assets, how much you have depreciated so far, and if you expense those, you put that full amount there. Like if you apply for Section 179, you expense all of them. That's why you have depreciated so far. So that's accumulated depreciation. That should be a subtraction from all your depreciable assets. So you have those three, like those two columns to work for the depreciation session for the beginning of the year, and then they have two columns for the end of the year. So pretty much where I click is going to calculate the depreciation remaining. Now, what I click on is going to take the depreciation total for you plus any new asset you purchase during the year. It'll go where I put my mouse, and let me click here. Is the beginning of the year is taking your total depreciation at the beginning of the year minus the depreciation deduction you took so far, like back in 2021 in this example, and it's telling you how much you have left to depreciate. So that's the beginning of 2022, the asset side. So at the end of 2022, well, it's taking the asset you have, the value of your asset at the beginning of 2022, plus any purchases of assets, depreciable asset during the year, is going there where I click, and now it's taking depreciation deduction you took so far and depreciation deduction you are going to take in 2022, and then the last column at the right is taking the total assets value minus all the depreciation to give you the value of the assets after depreciation deduction, how much more you have left to depreciate pretty much. And where those numbers came from, your depreciation worksheet should be up to date for you to be able to complete that side of your balance sheet. And let's see if we have an example here. And we do sell depreciation worksheets at liberdownload.com. And for this example, I have two worksheets that I use, one in a printable format so that I can print it and have it for for tax record purposes. So we have, let me see here. You can see maybe the number will be a little bit small. But asset placed in service in prior year, so that's the total assets. So it has been tracked throughout, and on the on here, that's what we have there. Maybe I just have to make this a little bit smaller so that we can see everything. And you can see that's the number here, and depreciation taken so far, you can see that's the number here. So we can move up a little bit to see the total. So depreciation prior years. So that is there. Let's go back to the balance sheet again. So that means how much you have left to depreciate, and that's the beginning of the year. That is the amount. That's the basis for depreciation for 2022. And now we have end of year, and you can see, I don't know if you can see it, but in the formula, I added asset purchase during 2022 to what was there before, and that's where this 997 is here and is in the formula there as well. And pretty much is total asset placed in service in 2022, so 997. And if we bring the, let me move it up a little bit. If we bring the balance sheet again, you can see that the total purchase, the total assets, line 10A, building and other depreciable asset at the end of 2022, the value of all your assets, like if you didn't depreciate anything, you see that they match. And here is named total depreciation deduction for 2022 because that go all the way there. But that column, that row will be different. Is cost or other basis. So that is capturing the whole, all pretty much the cost of all of your assets. When you purchase them, you record them, you have to update those numbers. But you have to pretty much go into um, your depreciation sheet and include your assets in it. And this number here, we should be able to find it on that. Uh, we should be able to locate. I don't know if I have 2021, so you should be able to locate it on it as well, and what was depreciated in 2021 and what remained to be depreciated. So if you are keeping your record up to date, you will have numbers to put in your balance sheet accurately. So I'm not going to talk about this sheet so much, but let's go back to the summary prime version 1. So it's telling us depreciation deduction, and we are going to bring the balance sheet and that depreciation deduction 569.446, that is the total here that is getting taken in 2022 for depreciation deduction for assets. So and is taking on the balance sheet is accumulating prior depreciation deduction, and the one we are going to depreciate for 2022 is taking them all together and giving you how much you have left to depreciate. And as for this form for the following year, you will have to update it. And I talked about it when I was explaining how to file Form 4562, depreciation and amortization, or how to depreciate a business asset. So you see where those numbers come from to go to your balance sheet. So when you have those numbers on the balance sheet, we do have amortization or intangible asset, and the principle is the same. So the principle is the same, and I'm going to open the amortization sheet for an asset that was purchased in 2021 for $37.99. If you go to the balance sheet, $37.99, and amortizable amount deducted last year was $1. You can see it there. That means for 2022 is going to be 1266. And if we go back to the balance sheet, how much was left to depreciate, and this is the start of the year, is doing that subtraction. In 2022, we didn't purchase any intangible assets, so it's going to remain the same, and depreciation taken so far is going to be what was taken prior year plus what you are going to take in 2022 in your taxes, and that is 1266, and remaining to take will be 2427. So that's the same principle as the depreciable asset as well, but with amortization it will be a little bit easier since it doesn't have a lot of number. So if you throw those two, is 2427. So, and that's the way you will update your balance sheet with your existing assets and asset purchase during the year. And when you are done, Total asset will calculate and it should match your total liability, and pretty much you will put so pretty much your capital stock, and you can do it the way you want to do yours. Like in my case, even though it's an LLC tax as an S corp, I just choose the capital stock section because S corp can only have one class of stock, and I think there is two type: common stock and preferred stock. But S corp should have one stock class. So I when we contribute to the business, so generally when you start a business, your S corp or your LLC that's an S corp, how much you funded the business at the start is your capital stock. But the way I view it, contribution toward the year, I just like to add it there instead of adding it on additional pay in capital. Additional pay in capital work with capital stock, but I don't really want to put it in additional pay in capital. So I prefer to just use the capital stock line. So, and I just add contribution throughout the year on that session. So it will take the beginning of contribution to the business plus any contribution in 2022 in this example, and then the returning earning is just going to be the difference between asset and liability. So in some way, but to be more precise, if you have profit in your business, it's going to go there. But we can come back and complete after we complete Form 1120S, but you can find your profits in your bookkeeping if you are transferring information from your inventory and sales, because inventory and sales will capture your sales, your revenue, and your bookkeeping will capture your expenses. But if you combine both, you bring your revenue to add it, you'll be able to find your profits at the end. And I will need to update uh, this spreadsheet for that to work for us. There is something I will update here because the right number is now showing up. Okay, and I found something here that maybe when we are working, we can come here and discuss it as we go, and then I will make changes to the sheet and you'll see how I do it. But anyway, so that's your profit, income and expenses. Your profit at the end will be included in the retained earning, but you can use that line. I personally use that line to balance out my asset and liability as well. So I have a difference here that it has to be zero for me to know that those two sections are balanced. So once you have your assets, you will put that on Form 1120S item F, which is 11873. So 11A73. We can double check to make sure that's what that is. 11A73. Yeah. So okay, let's not forget the business name. Well, for Form 944, employer federal annual tax return, federal employment tax return, and Form 940, employer federal unemployment tax return, annual unemployment tax return. The IRS recommended you use your business legal name as it is on your EIN application form or Form SS4. And if your business has that in it, like for example, L.C. L.L.C. with that between, some documents, some government document may not allow you to put those that in it. So if that's the case, that on your EIN form you omit the that, but your business actually has that the way you file with your state, maybe you might want to read the instructions, because I thought the name will be the way it is on the EIN application form in this example because it's different. But based on IRS advice, they say enter the corporation true name as set forth in the chapter or other legal document creating it. So you create the corporation with your state. So for that reason, in my opinion, I'm going to use CAP. If I'm going to use Liberman Consulting as an example here, I will add it with that. But if I'm going to add it on Form 11, on Form 944, Employment Tax Return, or Form 940, Unemployment Tax Return, I'll take those that out of there because the legal name on the EIN form didn't have that in it, I think. So, but based on what IRS say for this form, they want you to use how the name you use to create your business. I don't know if it means the same as the name you put on your EIN application form. So I'll leave that to your own description. So, and then you put your business street number and street name. I'll just put street, and then you put the city, the state, and the zip code. And colon, and then you have C. Check if Schedule M3 will be attached. We are not going to check it because I don't think we need it. But if you need it, later you will come back and check it. Or if you know right that you will need it, you will check it. If you are using a tax software should take care of that for you. So G, is the corporation electing to be a next corporation beginning of this tax year? I will say no. So, but if it's yes, you might want to read the instructions. So usually there is a form that will be completed to make that election, and that form should be submitted and approved before you even file an S corp. But they give you the option to choose that election by filing that at the same time. So I don't know. So like in our case, when I filed for L.L.C, when I registered the L.L.C with the state, it got approved. Then I filed, I believe, Form 3115, and yeah, I'll think that with there is 3115 and there is 2553. So and then IRS replied, and then they gave me the following year, beginning of that year, to start, you know, treating the L.L.C as an S corp and then file Form 1120S instead of 1065. So okay, Adam H, check 1. And if any of those apply to you, you check it. Otherwise, leave them blank. Adam I, enter the number of shareholders you have. So the number of partners in your business, you will enter them. I'm going to enter 5 in this example. Colon. Now, item J, check if the corporation aggregate activities or group activities. And they talk a little bit about it, so you can read in the instruction. I'm not going to do either. I'm not going to aggregate a group activity. So, but yeah, for passive income purposes, they have the group, and for risk purposes, they have aggregated activities. So, and if you do not aggregate activities, on your attachment that you will add, you will show income and expense for each activity on it. And I just prefer to do that than grouping. But again, if you want to group, you will find it in the instruction. So report only trade or business activity income on line 1A through 5. Okay, yeah, they have link there that when you click on it, it will take you to grouping. And I think it should be where at the beginning, those things that I uh, went past to get to when we start filing. So yeah, they will talk about passive income, and let's see if I'll be able to find the page for you. But passive activity limitation, activity that are not passive. I'm not going to talk much about them, but aggregation of activities. So yeah, things that you are passive, that are passive in your business, things that are active. So they talk about those on page 8 or even prior to that. So, but we are going to continue. So line 1, gross receipts or sell. Where will you find those? Well, in our case, it's going to come from inventory and works spreadsheet. So the spreadsheet track inventories and track total receipt as well. Because I want that to track all the sales, I include services in it as well. I just have a way of recording those so that they all can fit within. So I added those. They don't have inventory, but in the income section, the revenue from those services, from the service is there. So you will pretty much the total 53, 50, 56, 53, 74. So we are just going to work with the total session. We have two worksheets to work with. This one has the total, but has the category by activities. And then we have another one that is the cost of goods sold summary. Then we have one called sell status. And the status is recording the revenue, and it's tracking it by month as well. But it's tracking it based on I would say, yeah, it's still tracking. It's not tracking inventory, but it's tracking the revenue by month and by business activity. So that will be even a better one to use. And the bottom has the state portion to allow you to be able to file your state sales tax return. Okay, so you could use the top portion of this one as well. But if your spreadsheet is working right, it should match your cost of goods sold summary as well. So a sheet as well. So we are going to use either. So 56, 54. So we'll put 56, 54. And then line B, return and allowances. So line B will be 31, return. So let me say something here. Your receipt, your total sales should not include sales tax. Whether you are collecting the tax yourself, or another marketplace is collecting it for you, like eBay or Etsy or Mercari. So if I go to sold tab, gross receipt comes before the tax. Even though I'm recording the taxes, the gross receipt comes before that. So you are now going to use the total amount paid by the client as gross receipt. And I don't charge for shipping, but if you charge for shipping, it should come before the gross receipt, in my opinion. It is something you collected, but the tax should now. If you are collecting the tax on your own website, you have to give it to your state. So it should not be included in the total gross receipt. So therefore, you don't use amount paid by the client. I'm recording. Who is there? You cannot be here. Close the door. I'm recording. What? I cannot hear you. Oh, you are trying to watch this? Okay, you cannot watch what I'm recording. That's good you ask. You'll use the dry soap later, but not yet. Now you guys go shower and get to your schedule. And you remind your brother to keep his noise down when he wakes up, okay? Thank you. So now, so your total gross receipts, those are just getting, there is summary that is getting pulled from that to, to depend on how you categorize your sales, you should be able to put it to the right to to put it to the right business activity that is generating that sale. So 31, I don't know if we put that one there yet. So 31. And the return should not be in your gross receipt either, because they have a specific line for IRS. It might be a good way to put your return after the gross receipt column. We have this spreadsheet free for you to download, but if you want to build your own, just keep how you are going to file your business tax return to see how you will, how you will design your spreadsheet to be able to track things for you, so that you won't have to do calculation to back things out of your totals. Okay, so now let's go back to so balance. So start line 1A from line 1B, and let's see, we can just do that ourselves. And it's going to be 5654 minus 31. So that'll be 5623. 5623. So we can, I don't know if the other one calculated for us. We can check inventory. Yeah, well, it calculated 5623. Okay, so let's go back. So cost of goods sold, they say to find it on form 1125A. And well, if you have, that's why, I don't know if I said it before, but I say that you have to complete some form before you file this tax return. And I said that I record a video how to complete form 1125A, cost of goods sold, and how to fill out form 4562, inventory and amortization form for 2022, right? Okay, so uh, so assuming you complete form 1125A, then you go pull that. If you have not, then you pause and go get it done. Because that's a form you have to attach to your form 1120S. So cost of goods sold. Cost of goods sold is on line 8, 1416. So we'll go to our form and you put 1416. If you go to your worksheet, inventory and sales worksheet, you'll find cost of goods sold there as well. But when you have filed that when you complete the form, it is a form you have to attach when you have cost of goods. So you have to attach Form 1125A. Therefore, you will need to complete it. Okay, I think at this point we are done with Form 1125A. I can just close that one. So, cost 3, gross profit. Subtract. Okay, so pretty much do line 1C minus line 2. So we will take our calculator. That number 5623 minus 1416 is 4207. 4207. Okay, so line 4, Form 4797. Form 4797, you might need it if you use you expense an asset, a depreciable asset. You expense it by mean expensing it. You claim the full expense the year you purchase it, and like by using section 179, you claim the depreciable assets cost as an expense, deducting the full amount. That's what section 179 allows you to do. Allows you to do compared to depreciating the asset throughout its lifetime. So if an asset is supposed to be depreciated for 5 years and you expense it year one, and after year two you stop using it, the 3 years of the depreciation you took early, you'll have to put it on. You have to complete or file Form 4797 and add it back in it as an income. So that's one example that will make you, or that will require you to complete Form 4797. For that reason, I do not use Section 179 to expense depreciable assets. I just take small depreciation deduction throughout the years for those assets. So it does not apply to us in this example. We are going to leave that section blank. But if you complete Form 4797, you need to attach it. So line 7, other income or loss. And they say to attach statement for it. We don't have anything for that line. We are going to leave it blank. Line 6, total income or loss. Add line 3 through 5. So that would be 4207. And let's see if we have that on our sheet at all or not. So inventory and sales worksheet. So yeah, we do have 4206.78 rounded to 4207. 4207. And you can see if pretty much what I try to do is like I copied, let's see, I copied because the sales tax one is by month. I can just, to freeze you have to make sure you have column A showing up. And let's just freeze it. What did I do? Okay, let's try it again. Because the sales are recorded on on sales inventory and sales worksheets, you can copy your total receipts and you can paste that in your bookkeeping worksheet. On the, let's see here, yeah, on the income expense month, no inventory sheet, and I make sure it pulls to this pretty much is a copy on one spot and I allow the other spot to pull it to here as well. So you can see that 4207 pulling here, but on the on the bookkeeping sheet I have all the costs, the business costs in this example, and I want to have the revenue here as well, so that at the bottom I can have an idea or an eye on the profit. but I'm going to adjust the expense side and it's going to change the profit, because the profit should be, in this example, the profit should be something like 705. Okay, and I have a feeling I know why is now, and we can talk about the reason. So now we have 4207 and we have that on our document. So that means your document is up to date compared to what is aligning with your form as well. So compensation of officers, and they have 1125E to attach if you pay up to a certain, if you pay a high amount to your officers. And pretty much officers, they are the partner of the business that are working in the business. So now we are done with the income portion of the Form 1120S. We can talk about the expense. Something I like to point out is if you have a rental property, you should not put that income on the first line. It will go on Schedule K. You will complete Form 11 from ADA 25, and I can open it. Let's see if you have Form ADA 25. You will complete that with your rental, your residential rental property income, and your residential rental expenses. And the profit or loss from that will go to Schedule K, Form 1120S. But if you have active business activities, you will complete the first page of Form 1120S. And this example is for active business activities, or if you provide services where your time is used. Okay, so, and I think I should have talked about those type of nuances between the two. And while that is working, uh, let's go up a little bit. Okay, so when you pull your instruction for Form 1120S, you might want to read the top part to see, how IRS consider rental properties and active business. And I like to see where they will even start talking about a trade or business activities. A trade or business activity is an activity other than rental activity or activity treated as incidental to an activity of holding property for investment. So a trade or a business is an activity that involves the conduct of a trade or business, and they have that section 162, is conducted in anticipation of starting a trade or business or involve research and experimental expenditure. So the shareholder doesn't, if the shareholder doesn't materially participate in the activity, a trade or business activity for the corporation is a passive activity for the shareholder. So there is a difference between a passive business activity and a passive activity. So if you have a business that is a trade or business activity, but you are now working on it yourself, other people are working on it, it can be a passive activity for you. So pretty much what that says is when you are putting K-1, when you take K-1 and you are going to file your 1040, how you are going to claim losses is going to be different. So losses from things that you didn't participate in materially, they may not count against your W2 income, your taxable income, for instance, unless it is the same category. So if you have passive activity income, it can offset passive activity loss. But passive activity loss may not offset or may not decrease active activity income on your 1040. So that's when that will come into play. But on Form 1120S, you need to know if you have a business activity, a native business activity, or you have a passive business activity. I don't know. Hey, but anyway, so yeah, that's how sometimes I confuse myself, but hey, it's not my fault. So I don't think I wanted to read too much about it, but why not? Each shareholder must determine if he or she materially participated in an activity. As a result, while the corporation's ordinary business income or loss is reported on page 1 of Form 1120S, the specific income and deduction for each separate trade or business activity must be reported on attachment to Form 1120S. As I believe I mentioned it before, like when you have multiple business activities, the attachments, you can list them there. Similarly, while each shareholder allocates share of the corporation or ordinary business income or loss is reported in box 1 of Schedule K, each shareholder allocable share of the income and deduction from each trade or business activity must be reported on attachments attached to each Schedule K, and is to allow those shareholders to know, you know, to be able to know what they materially participate in and what they didn't participate in. So passive activity. So rental activities. So generally, except as noted below, if the gross income from an activity consists of amount paid principally for the use of rent, real or personal tangible properly held for the corporation, the activity is a rental activity. So there are several exceptions for this general rule. So I'm not going to read exceptions here, but okay. I think I just had to go through it. I'm trying to see how they are considering. Okay, anyway, uh, rental activities. The average period of customer use for such is 7 days less. I don't want to read too much of that. So I wanted to see what they said about rental properly. So reporting of rental activities. In reporting the corporation income or loss or credit from rental activities, the corporation must separate report rental real estate activities and rental activity other than rental real estate activities. So shareholder who actively participate in rental real estate activity may be able to deduct part or all of their rental real estate losses and the deduction equivalent to rental real estate credit against income or tax from non-passive activities. Generally, the combined amount of rental real estate losses and the deduction of equivalent of rental real estate credit from all sources, including rental real estate activity, now held through the corporation that may be claimed is limited to 25,000. But anyway, you can read it to see how those go. So report income loss from rental activity other than rental real estate on line 3 of Schedule K, and credit related to rental activity other than rental real estate on line 13, Schedule K. Rental real estate, I think it goes on line 2 of Schedule K, and they must have mentioned it somewhere to be talking about line 3 here. Okay, they talk about it on top. So they say to complete Form 8825 for rental real estate and to put the profit or loss on line 2 of Schedule K and box 2 of Schedule K1. So when you are filing LLC, usually for rental real estate, you use 1065, you have L.L.C. But if you are using an S corp and you are dealing with rental properties, it will go on Schedule K. Now on page 1 of Form 1120S, and then they have portfolio income as well, and you can read about it. So portfolio income includes gross income other than income derived from the original course of trade or business that is attributable to interest, dividend, royalty, income from real estate investment trusts, and so forth. And that will go on Schedule K as well. So, but yeah, you can read more about those to see where your activities will go at. Is it trade, business activity, or is it passive activity? So they talk about it. I'm looking for active activities. Activity covered by at-risk rule. If the S corporation is involved in one of the following activity as a trade or business for the income producing, the shareholder may be subject to at-risk rule. And then they have those. Um, you can read that. I'm seeing activity that are not passive. Okay, I think that's all we are going to read about it. To allow each shareholder to correctly apply the passive activity limitation, the corporation must report income or loss and credit separately by activity for each of the following: trade or business activity, rental, real estate activity, rental activity other than rental, real estate, portfolio income. So even in Liberman Consulting LLC, as even have to break down the business activity inside the trade. But if you have partners that participate in some and not in the other, I don't know. That's why I did it that way. But they do have the aggregation of activities, and underneath that, they just put trade and business activities, rental, real estate, rental, that now real estate, portfolio income. So that's how they break it down. That you should at least break it down like that in the attachments. If you have, one some. But again, if you have rental real estate activities and then you have trade, your trade income will go on line one, your rental activity will go on Schedule K, your rent on scale will go on Form 8825, and the profit or loss from that will go on Schedule K line 2 for rental real estate activities. And rental activity other than rental real estate will go on line 3 of Schedule K, and then you have portfolio. So your trade activity will go on line 1 of Form 1125A, whether you materially participate in it or not. If that's a trade or a business activity, that's where you put your profit or loss. But if you are engaged in rental real estate properties, you will complete Form 8825 and then you will put the profit or loss on line 2 of Schedule K. If you are engaged in rental activities that are now real estate, you will put your income or loss on line 3. So they have all those sub for you, probably the revenue, the expenses, and whatnot. But anyway, you have that area to work with. And if you have portfolio income, and the portfolio income has interest income, dividend, royalties. So they will go into those portions. So they wanted you to, if you have income going to those categories in the attachment, you need to break down the revenue for your trade, the revenue from your rental real estate, the revenue from your other gross rent, other rental activities that are not real estate, the revenue from your portfolio income, and then you'll have your expense allocated to each category as well. That way they can see, you know, maybe the bottom line is a profit or the bottom line is a loss, but then you will see which activity is a loss, which activity create a profit, and things like that. So, but that's pretty much what the instruction is trying to say here. So the following are now passive activities. So activities that are now passive activities, trade or business activities in which the shareholder materially participate in. So pretty much they are not really trying to explain what kind of business are business activities here, but they are telling you what kind of business that are now passive activities for you. So a trade or a business is still going to go on Form 1120S line 1, but on your schedule K-1 to be um, filed with your 1040, you have to check some boxes on your 1040 form that schedule K-1 will be reported to, and that will come into play. So if you didn't participate in your own business activity, so and then they have all those, but I was more looking into, maybe it was not in this form that they actually talk about businesses that can be considered business activities, but yeah, you can read through it if you wanted to know more about it. It's on page 8 of instructions for Form 1120S for 2022. So now let's come back to here. Compensation of officers. Well, we are going back to the instructions, and let's go to where we are filing. Generally, when they ask for the compensation of officers, they are the partner of the business, and the way I understand it is it should be your the gross that they took. They that will go if you file W2, W3 with SSA, the total on in the box one of W2, like the gross wage of the person. That's what will go on that line. But I modify a little bit in this example, and I will tell you the reason. But you your way might be different from mine. And an S corp usually uses accounting method. But if you are a small business that for the past 3 years your revenue is less than 26 million, I believe, if you are using cash method, you can use it. So, according to cash method, you don't deduct an expense unless you pay it. Now, when you incur it necessarily. So, in this example, if the partners collect salary around November or December, and the income, the social security withheld on the partner's income or wages, and the Medicare withheld on the partner's wages, and the federal income tax withheld on the partner's wages, and the unemployment, and then the employer portion of social security tax and Medicare tax, those total to employment tax. So if you do not Those taxes are due, or the tax return to report those are due by January 31st the following year for the prior year. For 2022 tax, for the 2022, those employment tax return was due by January 31st, 2023. So if your total tax is less than a certain dollar amount, you can pay with the return when you file the return. So in this example, 2022 employment tax return and unemployment tax for 2022, they are paid in 2023. Does that make sense? So therefore, I don't feel like I should include those deductions in 2022 tax return. I could be wrong, but that's the way I've been doing it. And the only way I feel like I should fix it is if I pay, let's say 2023, if I pay, if I pay to IRS employment tax, employment taxes that are withheld from the partners and the business portion of it. If I deposit it to I deposit it with IRS, because you can make deposits and then you can pay with the tax return if your liability is not much. So if I made deposit during 2023 for those employment taxes and then I made deposit for unemployment tax that the business owes for employing the partners, if I made those payments 2023 for 2023, then um, when I'm filing Form 1120S, I can put the total gross pay to the partners on line 7 because it's a deduction for the business. So let's okay, let me finish my talk here. But the way I have been doing it is because I didn't pay that to IRS in 2022, but I pay in 2023, I want to claim that deduction when I'm filing 2023 return. For that reason, I'm now using the same amount that will be found on invoice 1 of W2, but but the difference between that boss 1 and Social Security and Medicare deducted from the employee's salary, if that makes sense. So the net take home is what I'm claiming as a deduction here because I didn't pay those Social Security and Medicare that are withheld from the partner salary. I didn't give it to IRS in 2022 as using cash method. I don't feel like I should claim those deductions, those expenses in 2022 when I pay them. I shouldn't pay, I shouldn't claim those deductions in 2022 when I incur them, but I should claim those deductions in 2023 when I paid them. I don't know if it makes sense. So if you are using accrual method, your way of doing it might be different from mine. It might even be what IRS will recommend it, which will be the gross salary, which goes on in both 1 of W2 and some other will be added to like the French benefits and all those that the partners could take. So, okay. So the way I understood how they talk about it here, it seems like they want that gross because they say enter on line 7 the total compensation for all officers paid or incurred paid or incurred in the trade or business activity of the corporation. So, paid or incurred, but again, related to the salary, the compensation. So the corporation determine who is an officer. Okay, I'm not going to talk about that. So and then that's all they said. And then they talk about line 8 for the employees. But then later they talk about, okay, if the corporation claim a credit for any wages paid or incurred, it may need to reduce the amount on line 7. It may need to reduce the amount on line 7 and 8. Don't include salary and wages reported elsewhere on the return. Yeah, like if you include it in on form 1125A, cost of goods sold. But you can read, but then let's see. What I found surprising is IRS didn't really go in detail explaining the different nuances that business owners can find themselves in, when it comes to how to report those wages. So, and reducing certain expenses for which credit let me see. Okay, so they talk about all those credits here, but it's not really what we are looking for. But and they talk a little bit about the non-refundable credit somewhere as well. So the non-refundable credit that you take on your employment, how should I call it? Employment tax return. They You can add it back as an income on the first page. So they mention it somewhere as well. But pretty much here they are just talking about all those type of credits that you can decrease your line 7 with. Well, I do not have those credits, but I decrease that line 7 by the employment taxes that I didn't pay. So that's pretty much what I'm trying to say. If the corporation has any of the credit list above, figure the current year credit before figuring the deduction expense on which the credit is based. If the corporation capitalize any cost or which it figure the credit, it may need to reduce the amount capitalized by the credit, and they talk about those there. So if we go up a little bit, yeah, they talk about include fringe benefit expenditure, in the employer's salary. So if the employer in the officer's salary, if they have more than 2% ownership in the business, so also report those on boss 1 or form W2. So, and if when you're filing W2, there is instructions how to file W2 W3. But yeah, I'm very surprised that they didn't mention it. They mention all those type of things you should add if you pay front benefit to those partners and they have a lot of ownership in the business, things you should add back. They talk about those and talk about those credits that you could deduct from it, but they don't talk about whether you have accrue method or cash method. Those taxes that you incur but didn't pay. They didn't really talk about that. So I took the liberty for this example because 2021, when the partners were paid, the employment tax on those salaries withheld and the employer portion was paid early in spring 2022 to IRS. And the unemployment tax that the business should pay on those salaries was paid in 2022 in spring as well by January 31st to IRS. Therefore, when I'm filing 2022 tax return now, in 2023, I want to claim those expenses, if that makes sense, because I didn't include it in 2021 return. And those employment taxes for 2022, because I paid them 2023, I'll include them in 2023 tax return. So now that you understand the point, let's go find officers compensation that we need to use here. So you go to your payroll spreadsheet and Okay, so payroll spreadsheets, it should be under Form 1120S. See, we have payroll. And you should be able to find that on your bookkeeping as well. Okay, so what I was trying to say is, if we take this example, for example, the gross pay to the officers is $433.20, but the take home pay is 400. So $400 and the $33 we've had from the employees' salaries in 2022, and the $33 that the employer should contribute, that is Social Security and Medicare, which is a total of 6628, was paid early in 2023. Therefore, I want to make sure this 3314 is deducted from the gross wages of officers before I report it to the Form 1120S, so that I do not claim a deduction that I didn't actually pay in the year that I'm claiming those deductions, if that makes sense. For that reason, my boss one W2 for each one of those officers is not going to be what I would deduct on my Form 1120S for 2022. It's going to be 400 instead of 433. Okay, but again, your way might be different from mine. Just keep that in mind. I just wanted to have, you need to know why you are doing something. Does that make sense? So that when you are asked a question, you can explain your analogy. So that means I'm not, I pay 433 to the officers, but I cannot claim 433 because that $33 that I withheld to give to IRS, I gave it to them in 2023, not in 2022. So I had to have a good record for 2023 to deduct that. So salaries for a staff that are now officers is going to stay blank for us because we don't have any. Repair and maintenance, if you do, you put that on line 8. If you don't, you leave it blank. Bad debts, line 10. Rent, line 11. Rent here doesn't have anything to do with rental properties. It has more to do with your business office. So we leave it blank. So line 12, tax and licenses. So that's where I like to put employment tax and unemployment tax. Okay, so again, yours will be different from mine. So you might want to pay attention to what I'm going to say. Let's say I deposited that $33 that I withheld from the employer's salary in 2022. Let's say I deposited to IRS in 2022. If I have done that, line 7 will have been 433. So that means line 12 will have the other $33 that the employer contributed. The employer portion of Social Security and Medicare will go on line, was it line 12? Pretty much where the taxes and licenses, which will be $33. In addition to that, there will be unemployment tax return. So I don't have that on this form, but that's FURA tax. So FURA tax that you pay, you add it to that 3314, and you will put it on line 12. Gabriel, did you forget that I'm recording a video? I'm recording a video. It's my Pokemon card. Mine. Jaden, did you give it to your sister?
Not a key.
Gabrielle, I'm recording a video, so I'm going to deal with that when I'm done. Are you clear?
Give my energy card.
No, leave it to him. When I come up, I can talk about it. Are you two playing game already?
Yeah.
Yeah, and you are disturbing my video session. Do you know you can get discipline, and one discipline will be not to use your computer for the rest of the day, or using a but not playing game on it? Do you want to do that? So go up and no running. Are we clear? I'm recording. When I'm done, I will come up. Are we clear? Thank you. So, line 12 is going to be that $33 plus your employer portion of Social Security and Medicaid plus unemployment tax return that you pay on the salary. So you total them together and put on that line. You are now going to use the total from Form 941 or Form 944 because that total has the employee and the employer portion. So if you use the gross pay to the employees or the officers, you have to make sure you do not include it on line 12. Otherwise, you are going to deduct the employees portion of Social Security and Medicaid twice because you have it in the gross. You should not have it under taxes. But in my case, because I didn't give it to IRS in the year that I incurred those expenses or I withheld those from the income, it was still in my business income before I gave it to IRS in 2023. I'm going to wait 2023 to claim those expenses. Therefore, I'm using the net take home that I gave the officers, and then on line 12, I'll go look for 2021 employment and unemployment tax that I was supposed to give IRS in 2021, and I'll give it to them at the beginning of 2022 by the due date because I pay with their return. Does that make sense? It'll go on line 22. So, and this on line 22, you do not put state sales tax. So that's why you should now include in your gross receipts on top. On line 1, you should not include sales tax in that total because you are now going to deduct your sales tax on line 12. Your state sales tax should not be included in the gross receipts. You have it to give it to the state. Okay, but it's not a part of your revenue. Okay, so now where am I going to find this one? We are going to close it because we are done with it. But where am I going to find the prior year employment and unemployment tax return that I pay in spring 2022 to IRS? It will be on the bookkeeping worksheets, and I'm trying to pretty much categorize expenses in a way that it will pull to it will summarize by categories that is easy to use to file 1120S. And again, this form is free to download from ninasoap.com. Okay, so, and I know that it's not that much. Therefore, there is an issue, there is an expense that I didn't categorize well, or at least I want to double check it to make sure the number is right. So one way to check it is the one entry bank account reconciliation track expenses that go through, that go through the bank account, and your payment or deposit to IRS will go through your bank account. So let's go up a little bit. So we'll be looking if you are recording your expenses well and your income well, and you are reconciliating your bank account with your journal, you should be able to locate those expenses. So I locate them in February, and it total to $69.19. So what I'm doing now is just to show you how you can fix a mistake on your spreadsheet. So now that we know that it's 919, now 108, we need to go to our spreadsheet here to locate what expense in March that we categorize as tax and licenses. And that will be March state consumer use tax. So consumer use tax, I don't know about your state, but in the state we live in, when you when your business purchase an item online and you do not pay tax on it and you don't sell it but you use it in the business, you will need to file a tax return with the state and pay that tax to the state. Apply sales tax to it and pay it to the state. So sometimes it's called retailer use tax. Consumer use tax is when you purchase something to sell, but you use some or you use it in the business, you didn't pay tax on it. That's you are using your own product. So you will pay tax that was not paid on. Maybe you purchase a wholesale without paying tax on it. So if you use some in the business, you need to pay tax on that one that you didn't sell, but the business use. It's called consumer use. So yeah, retailer use and consumer use. So those you have to track them. And I pay to the states in March. So that means, and in fact, what I like to say about those expenses is if the expense is related to a depreciable asset that you purchased during the year, but you didn't pay tax on it because you purchased it from a land store, you will record it in a way that you can track those expenses and pay tax on them later. And I have to track them better. I thought I have, yes. So you have to track it in a way that, I have a formula that can pull it. If I categorize it well, that will put it to this page, and then I will see the bottom, and I know that that's what I need to use to file that tax, that consumer state tax. But at the same time, if that's a depreciable asset, that sales tax, you need to add it to the cost of the assets before you put that in the depreciation category, so that the cost, the basis for depreciation for that asset, if it's used 100% in your business, include the cost you purchase it and the sales tax you pay later to your state. So that will control the basis for depreciation for the asset. If that's a supply you use and you purchase it without paying tax on it and you use it in the business, you cannot really allocate that to sales that you fulfill, orders that you fulfill using that supply. Therefore, you will pay tax on those supplies that you didn't pay tax when you purchased it online, but you know that if you went to your local store to purchase it, they will charge you sales tax on it based on your state. So that retailer use tax or consumer use tax, you will track it to pay tax on it. But when you are adding that supply that you purchase as an expense to your spreadsheet, you should add that tax to it right away so that that total is deducted in your expenses. Does that make sense? So you are not going to record that sales tax all by itself on form line 1120S, but it should be incorporated in your depreciable asset if it's related to a depreciable asset, and that will be capitalized, or it should be incorporated in the consumable or supply or deductible expense that is related to, so that you can deduct it in full. So and paying it back to the state is now an expense that is deductible in this case because it should have been allocated to a depreciable asset or a deductible expense in 2021. Therefore, I didn't categorize this expense properly. I put tax and licenses, and it is under expense category, and it is, pulling it to that line for me, which it should not be. Therefore, I'm going to leave that blank. But it will be great to have maybe non-deductible category for those type of expenses, because it did decrease my bank account by that amount. So instead of adding line 12, I believe I should have something for state tax. Otherwise, I will use something like blank as well. But I didn't really want to use blank because I have different type of summaries and I want to capture all the business expenses, not just for tax purposes. So I'm not seeing anything here that will work well for me. And when you have the spreadsheet, you can make changes to it the way you want it. And the function section is where you will make your changes so that it can show up where you want them to show up. So under expense category, we can just put status use. Oh, okay, we do have sales tax. So I need to go back there. When you are using this spreadsheet, if you're not categorizing your expenses well, it may not pull properly to the total spreadsheet for you. So, okay. And now for line 12, I'm going to take line 12 out of there. It can just be called non-deductible. If we add non-deductible, it will have work as well. So this spreadsheet, the way it works is it allows you, if you want to have colon for each type of those expenses, you can develop um, your own spreadsheet, and you can just have all those expenses from the Form 1120S. You can have them by colon, and when you have an expense, when you put the dates and what the expense is, you can just go to the right column and put it there. And then the bottom or the top will have the total of each column for you, and you just use that to file your return. I mean, that's one way to do it as well. If you choose to, you can recognize some already compensation of officers and things like that, so that each session um, can total things for you. Okay, so, and the way I did it, when I put compensation of officers here, I only put the net take home, because what I withheld from their income, I have it in the business. I only put the expense 400, the take home. So now that we made this adjustment, let's go back to where we were before to see if that fixed our issue. It was not this one. Okay, no, it was not this one. Maybe probably this one. So you can see now that, was it this one we are using? I thought the page was fuller. Okay, so you can see that there's some similarities on those, but I just try to duplicate multiple sheets and make few adjustments to each one depending on what I'm trying to capture. So 6919 is what we need. So we are going to go back to our form, and that 6919 again is from 2021. Employment and unemployment is employment and unemployment tax that we pay IRS in spring 2022, but for 2021 salary. So we will put that 69 on line 12. Interest. I like to put credit card interest here. So, and again, if you want to know what will go on line 12, you can just read the instructions as well. And again, IRS is not very clear why you put on those lines. I'm not sure why, but The interest include only interest incurred in the trade or business activities of the corporation that isn't claimed elsewhere on the return. So I like to, if you have critical interest, in my opinion, that's where I would put it. So if you are looking for, if you are looking to read more about line 12, you can read it. So to see what they said about it there. But yeah, so pretty much this is to explain the component of those tax return the way I see it, but it's for educational purposes. You can use it at your own discretion, and if you don't have a lot of expenses, you can file your tax by hand, just like the way we are doing it, or you can just use the tax software to do it for you. Or if you have a lot of expenses but you understand the different component of the tax return, you can use the tax software, and your understanding and your knowledge will help you answer the question into the data that the software is asking, and the software will complete whatever it needs to complete to be fair for you. So that's why I want to take time to go in detail how where I'm finding those numbers that I'm putting here to give you an idea how you should be tracking your numbers throughout the year to be able to have those summaries that you'll be able to put on your form, tax form. Okay, so line 14, and again, the goal of our business, the goal of our blog articles and our videos is to share different ways we make money, and different ways to make money, different ways to save money to reach your financial independence, where you do not depend on your employer to provide for your family or your need. And filing your tax return is one way to keep your business expenses low when you just start out. And over time, as your business grows, you have a lot of expenses, you have a lot of revenue, you can hire a tax preparer or professional to file it for you, or you can file it yourself. But at least you have an understanding of how to do your bookkeeping. By then, you know how to do your bookkeeping in a way that will allow the professional or yourself to be able to file your tax return. Because even somebody file it for you, it is your responsibility to make sure it is accurate, because it's based on the information you gave them. And it's based on the information you gave the software as well, that the software will file it for you. So yeah, it's one way to save money, but in this case, it's not in personal finances, but it's for business. So yeah, to keep your business expenses low, if you just start out, you can file your own tax return if you want to give it a shot. It takes a lot of your time, but it saves you money, and then you can use that money to focus on the income producing side of the business. Okay, so line 14, depreciation from Form 4562. Now claim on inventory cost of goods sold form. So that means if you have asset that depreciable that you purchase during the year, you will need to, in fact, it just means that if you are going to claim depreciation at all, you are still going to use that Form 4562, even if you didn't purchase a new asset. So, and you are going to attach it. So, Form 4562, if you have depreciable assets prior year and or current year. So that means you have to complete Form 4562. And I have a video how to fill out Form 4562 for 2022, and I will link it as well. But let's go find that. I don't know if I have it here, but let's go find Form 4562. And what I'm going to do is I'm going to copy that form, and we are going to go back to the um, Form 1120S, and we are going to put it there. what they say to find them. They just say depreciation on Form 4562. Oh, I think I click on this, but I didn't talk about it. Maybe I'll talk about it when we go to Schedule K. Okay. So we complete the Form 4562, we'll just go straight to the depreciation. So the depreciation total is on Form 4562, line 22, 569. So we'll go to our Form 569. We skipped interest. I talked about it, but we didn't complete it. So interest. So let's see if we have critical interest you want to put there. It will be on the bookkeeping. So bookkeeping 581. So 581. So pretty much in some way, the Form 1120S is pretty much when throughout the year you have put in, you make um your expenses will go on the expense detail. You will do your journal entry, and you will choose the category properly. And when you choose it properly, it will just pull the summary to different tabs for you. And one of those tabs is just like your business tax return on your worksheet. Like you can just pull numbers from here and put it on your tax form. That's why I have the form that will go on. Try to have different version of them, but yeah, it will, it will. This is a little bit more organized here too, but this is by activity, and this one is by month. The same thing, but by month, and this one is pretty much somewhere the same thing by month. But anyway, so 581. Let's put 581 interest. 581. Okay. Line 15, depletion. We are going to leave it blank. Advertising, line 16. If you have something for it, you'll put it there. I don't think we have anything in this example. So, line 16. Line 16 is blank. So, I don't know if I need to make this a little bit bigger. So, it's blank. So, line 17, profit retirement plan. We don't have it, so it's going to be blank. If you do want to read the instruction and complete it. So employee benefit program is going to be blank in our case. Line 19, other deduction. So they say to attach a statement. So line 19, okay. So the bookkeeping has line 19 for us broke down in detail. Let me make it a little bit smaller here. But we need to work on that attachment so that we can complete our Form 1120S. You can just use your mouse to total them to though, but we need to show that attachment. So let's work on that attachment. And I think I have to make another adjustment here, but that attachment is on the bookkeeping Schedule K attachment. So when you are creating an attachment based on IRS instructions, you put your business name, your business EIN, and then the form and the line that the attachment is supporting. So we need to update it. It is now up to date. Okay. So those will be like numbers from last year, I think, in this example. So we are going to complete that, and we have the line 19 deduction that we will work on as well. And I think I need to make update to this little bit. And this version, I have it, and I'm going to have it as free download under ninasoap.com. And while I was filing taxes this year, I made few adjustments, and I'm going to add it as a free download later as well. So it's going to have two there, because if I want to make that adjustment, if I wanted to put a new version there, I have to clean it up, take numbers out of it. It will take a while. So I want to have a free version there that if you want to use, you can use it. So it's going to be pretty much, I'm talking about the bookkeeping. I'm not sure about this one. This one, you might need to design it yourself. So I don't know if this one will be for sale or if it will be a free download. I'm not sure yet. But yeah, so let's, and that's pretty much this one. I just have it on the schedule L worksheet. But we are going to pretty much categorize the line 19. We already know those lines, but we are going to categorize it between retail and service. But we need to make sure we have them categorized on the in the bookkeeping for us. So the bookkeeping, I know that we have this one that is tracking those expenses by business activities. By business activities, and okay, and we have two columns here for retail and one for service. So let's see if they are up to date. And they are up to date. So we have one expense for service, and I think that's accurate. So, and I put the depreciation, the amortization that we claim, I put them at the bottom here for expenses. Let me make the expenses are total. Yeah. So I need to add a total section at the bottom there. Let me see if I have it here. I do have it here. And so the depreciation, even though the depreciation and the amortization are not an expense, that's why they were not on the spreadsheet, but I add them on this tab. But you could add them on like the detail tab as well, so that they can naturally flow here. And the total expense is here, and I will want the total expense to be on this side as well. So the total is just going to be the sum of those three. Okay, so what else we are going to do is, so we do have our expenses. Let me see if I can, okay, do it this way. And we just want line 19. So we can make it red so that we can see our line 19. Uh-oh, is it too red? Okay, and then when we go to the bottom, we claim depreciation deduction already, if you recall, but we didn't claim amortization. So amortization is going to be added as well on line 19. So I want to make sure the total is carrying out well, and you can see Let me see here. Yes, the total is kind of well, but I would prefer things are organized a little bit better in this session, but things are total real well here as well. And let me see how this one is working here. Okay, things are the total here is correct as well. Not sure why I didn't do the total of all of them. I calculate the profit right away. But anyway, okay. So I think where we are going to find our retail. Let me go all the way up. Okay, I have it here, but I didn't break it down. But I think we'll need it. Let's see if the first one has it broken down for us. Okay, so the first one has the expenses but does not have the income. The second one has the income and the expenses but not broken down into retails. Let me see. And it has it by month. The third one has it by month as well and it didn't break it down. But we can use a combination of those to work with. So since we are on this one, we are going to find the revenue that is the service, and then we can just subtract the rest. You can subtract from the total to find the retail. So I'm going to complete it together so that you can see how you break down your thing. So we will find that on where those revenue came from. That will be inventory and sales spreadsheet. And I will just use cost of goods sold. And if we freeze that, we can scroll down to gross receipt section and we'll go to service. So it depends on how you categorize your things. So service 481, everything else is retail. So 481.12. In fact, the way I'm going to do it, just going to copy that number and I'll paste value. The bookkeeping, I'll paste value for service, and the retail is just going to be the sum of the total minus my service. And then the total to that will be used as a double checking things will total both and it should match the number we put on line 1. So the refund, pretty much everything will just flow from there. So the refund is just going to be that uh, because it's retail, the cost of goods sold is going to be the total here, and this one is just going to be the sum of those two, and I can just drag it to here, and this one I can drag it down, and the service is going to be 0. In fact, let me click on this to have it well formatted. So what this is, I think it's just the profit. So it's going to be the sum, oh, the sum of the gross profit minus cost of goods sold. And I will drag it, and you can see that this number will match this number that is the number for the total year. So, and pretty much whatever is on that left side is like other income or something like that. Okay, so other income is 0, so that means the bottom total profit is just going to be the total of them, and I will drag it, and it's going to be the 4207 that we reported on the form. So now that we have this one completed, we can go to the Schedule K attachment and just add it there. Even though it's not what we are working on yet, we can just update it. So I'm going to make it a little bit small so that I can see them. So the retail income and loss. So it's going to have a formula. So the revenue is going to be, let me see. Okay, anyway, the revenue is going to be 3365.66. We'll talk about the expenses later. The service is going to be A41.12. I think the expense is going to be down 97 something. So now let's go to the expense section. So that's why you have to be very careful with your expenses, because some of the expenses are not deductible. Therefore, you have to be vigilant how you are categorizing your expenses so that they can flow properly. So, and you can see we are going to use this session here. You can just make it, sorry if it's too bright, but the total of that expense, I'm just looking to make sure there is no raw materials, anything like that. So the total of the expense is 3503. 3503, let's put it 3503. Don't know if I'm calculating it right, but it's not accurate yet. 3503. Okay, so anyway, let's go to let's go to line 19. Let's put those numbers in it. So I'm going to move. In fact, the way I'm going to do it, I'm going to go back to this one. We can see, I don't know if I need to make it like this. That way we have both we can work with. And let me see if we can make it even smaller. See if I can hide some. Maybe I'll hide this total. Don't know that would be a good idea to hide that total, but okay. So let's just make sure that total does not confuse us. So I'm going to make that total black. Okay. So line 19, if we go back, we don't want anything that is not red. So retail, no, is it retail that starts? Yeah, no, service is the one that starts. Service is the one that starts. So service has 197.95. And I'm just going to take those numbers that we have here out. So we have 197.95. And what I was trying to say earlier is GSHA, when I was filing taxes, I reorganized this. If you reorganize it well, when you design your attachment, if you organize it well, you can easily copy and paste your numbers. That's pretty much what I wanted to say earlier when I was talking about it, when I was saying that one, it may not be for free, it might be for several things like that. So, but the bookkeeping one is going to be in the free download for sure. So, okay, so now we need to look for office supply use, office supply use, because you notice it right away that the numbers are now they are they are now in the tables are now in the same order here that they are on the bookkeeping. So you have to actually look for those things. So what I will do is I will just highlight numbers that we use to make sure we don't miss anything. So next, legal and professional. Legal and professional, um, we don't have any expense there. So this total is helping, knowing that there is no expense in any category on the far right. So biannual report, we do not have any expense. Recording computer software that we put it already in it under service, so we can find it. Oh yeah, that's here, and we can highlight that. So I don't know which one I should be trying to find and put here, but we can even start from the bookkeeping. That way we don't have to skip costs. So mail, CC 138, that's under retail. So mail. So this one does not have mail broke down, but I'm not going to take time to break it down. Let me see. And technically, if you want to reorganize this, you can. Um, just like let's take those, let's copy those names that we have. You already start putting things in it, so I don't really want to change it, but let's, I'm going to just copy and I'm going to insert a copied cell. So, and then I will just change this to mail, for instance. Does that make sense? Yeah, so, and that's just the way you will do that to update it. What is office supply use? We have that. Parking supply use, we have that, but not in the right place. Organizational things, we don't have it, we don't use it here, but we have spot for it. Platform fee. Okay, so now let's take this CC 138 and let's go back to mail, and it will be under retail. And because I'm copying the number, I'm going to paste value so that the formula does not carry over. So what is the next expense? And then here I'm just going to make it like that. And we have that. There is packaging use. So packaging use is under retail as well. Let's see here, physical product. So I'm going to copy it and I'm going to come back to packaging use and I'm going to paste value. And I can just have both now. So organizational costs, if that's your first year being in business, you might have startup costs and organizational costs, and those you can, they are amortizable as amortizable costs, but IRS give you the option to deduct them the first year. So they'll go online, I think deduction. There is a limit that you can deduct, and past that limit, the remaining is amortizable. And I believe 15 years to amortize it. If you decided to amortize the whole things, that under publication 45 instructions for form 4562 under amortization, you'll find those section codes. You'll find organization costs and startup costs there and how long you should amortize them if you didn't deduct them as an expense the first year you are in business. So we have 00 for those two. Platform fee, we have it, but we have them detailed, so we'll need to total them. So the platform fee, they are going to be under retail. So I will need to see the platforms. So I have eBay, Etsy, and Mercari. So that's 3. And the total is going to be 442.37. 442.37. But we can come back here to double check it. 442, I'm reading at the bottom, 442.37 for those 3. And then we have payment getaway fees. And payment getaways, we have PayPal and Stripe. So PayPal and Stripe, they are both retail as well, because I have digital and physical categories, subcategories. So it is 1340. So 1340 under retail, I have 1340. Okay, website fee. And website fee is not summarized here, but is broken down. And we have domain registration, website hosting, and if you have website team, that is an annual fee of yours, you'll include it. But we have under retail, we have, but I have retail and digital, they share the fee. And we have 30805, 30805, 308.05. Okay, so we can double check that. 30805. Okay. Oh, I forgot to keep making our expenses yellow as we progress, right? So I believe we did. Which one is this one? We have not done that yet, you see? That's why we need to be careful for the expenses that we are claiming, so that we do not forget something. What is this one? 442.37. So we need to make it white, yellow. Okay, so why did we leave PO Box fee? PO Box fee CCC. So PO Box, it is an annual expense retail. CCCs, we need to make it yellow. Jaden, I'm recording. You need to wait, okay? Okay. So CCCs. So so we have, what else did we, what expense we have now? Then shipping orders. So shipping order, let me just copy here. Shipping orders is a retail. We are going to paste value, have it there. So reimburse expenses. So business mileage and business office expenses like utilities and internet cables. So if you are using, you have an online business, just now I'm recording. So if you have business, online business, and you think you are using a lot of data, a lot of internet data, you can use your house, like square footage, and your office square footage. So you take this office square footage divided by your house square footage to find the percentage, and you can use that percentage to apply to your internet bill. And you can and then that is the business portion of your internet. Does that make sense? And if you use a lot of lights in your office, then that is, you can reimburse yourself a those type of utilities as well, use of your home office. If you are now paying a mortgage, I don't know if I would recommend you pay yourself rent though, because when you are using a home office at home and you are you use the employee reimburse account and you pay rent to yourself, what I will suggest you do though, maybe you might use IRS standard deduction for home use office. They sense by mileage up to certain dollar amount or up to certain square footage. I think there is a limit. I think it's like $5 per square foot, per square footage, up to 305 square footage that you can deduct, something like that. I'm not sure. If you are going to reimburse yourself, you might want to use a IRS standard fee set. That way you do not reimburse yourself too much. So, but still, I will not recommend you reimburse yourself for use of the office, home office, because when you are paying yourself rent, you should be filing to report that rent as an income, maybe on your 1040, or maybe adding another schedule C there for collecting rent from yourself is another income. So you might want to be careful with that. But if you paint your office, you didn't paint your whole house, you paint your office, that's office, that's a business expense that your office can cover. So you have that, and then but things that you are actually consuming, your home office is already there, whether you are using it for your office or not. That's why I say I'm not sure you should be paying rent to yourself, because if you are paying rent to yourself, maybe another part of you should be claiming that, should be reporting that to IRS as an income, maybe on your 1040. So that's why I'm saying that. So, but if you are turning the light on in your office, you are using electricity, so it can increase your electricity bill. So the percentage of your office, the percentage that we calculated of your office side of the house can reimburse you for that electricity you are using. I don't know about gas though. If you do not have a thermostat to regulate the gas in your office, when you turn the gas on, it's the whole house. So I don't know if you reimburse yourself for that. If you are using like the way I do it here, because the office is on the cold side, if I'm using an office space heater to compensate for, I have gas here, but it still feels cold because it's the basement. It will going to increase my electricity more because I'm using how do you call it, space heater, and it's electric. So yeah, I don't do it because the business does not generate a lot of revenue yet, but it is something I can deduct. The office portion of the house percentage can be applied to our electricity bill and reimburse us for that. So mileage, yeah, if you are using your own car to go mail orders or purchase product for your business, you can reimburse yourself for business use of your car, for business mileage, and using employee uh, employee reimbursement account under accountable plan. An accountable plan does mean that you are keeping record of those mileage and you are reporting and you are recording it. So under I like to use that plan more because it's now taxable to the employee. If you are using non-accountable plan and you are giving money to the employee, you are going to report that on the employee W-2. So, but if you are using accountable plan and you are covering the business use of the car or the business travel, the business meal or things like that, and you are not going over IRS fee, standard fee set for those type of expenses, you are not going to put the excess, in the as an income on the employee or officer W-2. So accountable plan mean if you didn't give money, when the employee come back, he will give you the change back and report the expenses. If there is no change, or if there is one, will report those expenses for you to record. So I like to use accountable plan. So those expenses are not taxable to the officer. But again, I'm not even claiming them here, but we have good record of those business mileages. So yeah, and using business mileage, you can reimburse yourself, and you just have to look online how much IRS is the standard fee for mileage. If you're not going to claim actual expenses, what the standard deduction cost is, and for mileage, and you just use that, it will give you, it's like 55 cents per mileage. It varies year after year, and I just use that, and they have it um meal as well and lodging. So I like to just go with, the IRS mileage. If you have things like that, it will go under employee reimbursed expense. And you can, when you design this for yourself, you can add the category. This one does not add the category, but you can add the category. And if you want to have ideas what you should put under line 19, you can look in the instruction, and the instruction detail should guide you when you are creating that attachment to have room for those expenses that you think your business will need. So, and they even have a spot for supplies. I'm very surprised that supplies used in the business does not have its own line on Form 1120S. It's on line 19, other deduction. So they have those things that will go, and amortization that's where amortization goes as well. And you can see business, startup, and organizational costs. But supply, I don't really put supply on line 19 because I'm trying to incorporate it in the cost of goods sold. So that's because as a business, if I purchase inventory, I purchase supply in bulk, you only deduct supply used. You can even say, they say supply used and consumed. So now supply purchase. But if I put supply use here, the portion that is now used, where that will go. So I want to capture all of them. So it is an asset in some way. So I like to have, didn't start it like that, but I'm buying future supplies. I'm trying to incorporate it with my inventory. So the cost of supply used and consuming the business will go into cost of goods sold as well. So that I can, because I'm capturing the purchases of those supplies, I can now take the deduction of those supplies used here. The inventory will be out of balance. So cost of goods sold is including those supply used, in my opinion, as well. So that if I do not use a supply but I sell it, it can be together. So, but it's up to you. But supplies that I have not incorporated in the inventory, so when I use a portion of it, it will have its own line. That's why we have $1.56 somewhere. $1.56. Okay. So now let's go down, and I think for employer reimbursement account we don't have anything, so we leave it alone. So line 19 include amortization 1266. If you are wondering where that will be, it will be on Form 4562. So Form 4562, we copy depreciation from here. We'll go look for the amortization, and the amortization is 13. So we will copy that 13, and pretty much is 1266 something. So we can just go, oh, what am I doing? Okay. can just copy that and we'll go paste in the attachment under retail. Okay, so we have, let me see, we have line 19 for retail is 1685 and for service is 197. So we can, yeah, we won't be able to find that total. Yeah, we should be able to find it on this session. So now let me, okay, so let me just go up for you to see it. So you see those yellow things. So there we have service in column T, we have retail column U and V, and then we have total. In fact, we have 3 retail before we have the total in X. Okay, so we are going to total. In fact, we can just click on this to see what is getting out. Okay, so yeah, that total won't work for us because is making the total of everything. So what we are going to do is we are going to total everything that is yellow. And in case you are wondering, because I'm using the total and taking the service out, that's why you have that negative. That negative to zero it out. So we are going to total the total red, and we are going to add amortization to it, and that's 1883.08. 1883.08. We'll go back to this one is 1883.08. So we are going to copy those expenses up. So this one I'm just going to copy it. And I'm going to paste value. I still don't think it's right. Okay. Because the expenses here will, yeah, I see what I'm doing here. The total expenses for the business is not just line 19. So we need to use the total expenses. And the total expenses is going to be those line here. That's 3305 though. Why the 3305? Let's go back. It's not working. Okay, so 3305, 3305.08. So 3305.08. The bottom expenses, that's just line 19, but the expenses on top is the expenses for the whole business, and I don't think this revenue is accurate, so we need to go check if we have first. Let me see if the total expenses is 3503. So let's see if we have the total 3503 accurate. So 3503 we have it. So let's double check our revenue. So the revenue the revenue, if I use me copy and paste it, it's not a number. It should be that 3365.66. Oh, okay. I didn't know that we have the total I was looking for there when I was doing about, yeah. So that is the total. Okay, so pretty much the total revenue is taking the gross receipt minus the return minus the cost of goods sold on that session, because we didn't include those in the expense side of it, so they have to come out somewhere. So we are using the total gross profit pretty much, or the total income, if you want to say it that way, which is that 3365. So when we go to expense section of it, we will more use this one, and it can be a little bit confusing now that I put those two together. So we have all the expenses. You can see, line 7, compensation and interest and taxes. So we put those in it before we got to line 19. Even depreciation was line 14, I believe. So we have that at the bottom. So those expenses needed to be included as well. So it's not just line 19, but it will be the total of those expenses. So when we add those expenses to the attachment, we should find the revenue. And the revenue, let me see if I don't think this one has the income. This one does not even have the expenses. Okay, so does this one calculated? So this one does not. This one has the income broken down and has the expenses together. So you can see that we have, let me make this a little bit. We have the profit here, which we have on our attachment 702.75, but I should have included another line to total all the expenses, because I added those depreciation at the bottom of the table. It totals to 354303. I didn't do it on this one, but the others has that. And I think this form, in fact, this form has the layout to break down the retail and services. I just didn't carry over on this one. Otherwise, it would have been a good one as well to to locate the profit. But you get the idea. So we have the profit. Let me make this one wide. We have line 19. We have the profit broken down between retail and service. The expenses, the income, the the revenue and the expenses, how they allocate between those two. We have them, and then we have the expenses as well on line 19. So we'll take that total 1883 to the form. We can close out of. In fact, we'll come back to this one. Before I forget, let's just talk about it. When you file Form 4562 and you claim now to take Section 179 for assets you place in service during the year, and you claim not to take special depreciation, I like to have a note on my attachment to talk about it. So here, I just have it set it up, and I can just me just group it. so that we knows that we group it. I can just hide that because the asset we place in service was a 5-year asset. So I can just group the one that I don't need. And if when I print it out, it will just show 5 years. So we claim now to elect Section 179 and we claim now to elect special depreciation on that asset. So, and you have to remember when you have a template like that to use, you have to remember to change the dates, the year on it before you print it out. So, and we have this date here as well that we need to change the year as well. That way you can just have a template like that and just keep using it year after year. You don't need to keep reproducing it. So it will save you time in your business. So 1883, let's go put that number on line 19. I think at this point we can close 65, 62. And so line 19, 1883, I believe. Line 20, total deduction. Total deduction, let's see if we can find it on our bookkeeping. Total deduction is going to be, I know some of them calculated for us, 35 something, 3503 is at the bottom here, and it's at the bottom, 3503. Then we can just put 3503. So alternatively, we can calculate it. So let's make sure we have all our expenses in front of us and let's go. So 400 plus 69 plus 581 plus 569 plus 1883 and okay, 3502, because since I rounded, why not 3502? That's why you actually total them here and just add it so that they are. And that's what those uh, um, rounding can pose issues sometimes when you compare the form to your original document. So original business income will be line 6 minus line 20. Again, we can calculate that. That would be 4207 on line 6 minus 3502, and it's giving you 705. Again, rounding issue is a little bit off compared to our numbers, 703.75, but and which can be round to 704. So for that to be 704, this total has to be 3503. So I'm just going to leave it like that. But again, you can adjust a number for, yeah, like that 1883 could be rounded to 1884 for this one to be, 3503, but I'm going to leave it like that. Okay, so now that we have deduction down, Form 1120S, we have tax and payment. So 922A, excess net passive income or leave for recapture tax. So if you have something related to that, you might want to read the instruction on it, and I'll show you how to locate those things a line or in the instruction. And you'll have excess. I thought S corp usually we don't do passive income in it, but if you are doing passive income in your in your S corp, there is that there could be a tax to pay on those excess net of passive income. So there is a worksheet to complete to be able to deduct that tax. It's not going to apply to us. Therefore, we are going to leave line 22 alone. Line 22, estimated tax payments and overpayment. Again, is related to that tax. So if you make estimated payment related to it, it'll go there. So, and line 24, estimated tax penalty will go there. And I'm sure they will talk about it. So line 25, amount owed. Line 26, overpayment. And that. So, okay. So now you will put your taro. And I'm just going to put President. May the IRS discuss this return with somebody else now? So the tax preparer, pay preparer is only you leave a blank if you are preparing for your own business. So when you print the form out, you sign it and date it and make copy for your business return and probably make a copy for your status return. Some states like Iowa requires that a copy of your state of your federal 1120S is added to your state form 1120S. So you might make a copy for the state, a copy for your business record, and the one you sign, you will be ready for IRS. So Schedule B. 1. Check accounting method. In this example, we are going to check cash. So if you are using accrual, you check that. 2. See instruction. So this one, I'm just going to copy. Usually it's going to be the business activity and they will have instructions on it. Let me see. That you can read. That you can read. But I'm just going to copy the example that we have here. I'm adding two things to it. I'm just going to keep it like that. And so pretty much the business activity and the type of product you sell, they want you to a little bit describe it. So yeah, you can. Uh-oh. Okay. So at any time during that, just to give you an example how you'll complete that. So at any time during the year was any shareholder of the corporation a disregarded entity, a trust, estate? No. So at any time during the year did the corporation own 20% directly or indirectly, 50% or more of other companies, foreign or domestic? No. So if yes, then you'll need to complete those tables. Does the corporation own directly an interest of 20% in any other foreign or domestic companies? No. At the end of the tax year, did the corporation have an outstanding share of restricted stock? No. So line 6, has the corporation filed or is it required to file Form 8918? No. B, at the end of the tax year, did the corporation have any outstanding stock option warrant? No. Line 7, check the box. No. Okay. So line 8, if the corporation was a C corp before he elected to be an S corp? No. If so, I think there is a dollar amount they're asking you. Did the corporation, line 9, did the corporation has an election have an election under 163 for did the corporation have an election under 163 for any real property trade? No, 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 no. But again, if you wonder what they are asking you there, is it question 9? Yeah. So it's related to business interest expense election. So if that is related to you, you can read through it to see, you know, how you should answer that question. So line 10, did the corporation satisfy one of the following? The corporation own a pass-through entity. The corporation aggregate average annual gross receipts. Um, for the past 3 years has what? Gross receipt over 27 million? No. The corporation is a tax shelter? No. So for all those, we say no, one or more. So we say no for each one of them. That will be no. If you say yes for any one of those, then you have to complete Form 1190. If any one of those three questions is related to you, then the answer will be yes. So, and then you have to file Form 8990. So, but in this example, it's not 11. Does the corporation satisfy both of the following? The corporation total receipts for the tax year were less than 250,000. Yes. The corporation total asset at the end of the year were less than 250,000. Yes. So, if yes, the corporation is now required to complete Schedule L and M1. So those are the end. And you can see here, Schedule L, that's the balance sheet, but it's still good to have it for your own record though. And then Schedule M1, which is pretty much like reconciliation of income statement or something like that, income per book. So that's what they call it. Okay, so where are we? Okay, so we have yes there. B, Schedule B, continued. Line 12, did the taxpayer during the year, did the corporation have any non-shareholder debt that was canceled? No. During the tax year, was a qualified sub chapter terminated or revoked? No. Did the corporation make a payment that required Form 1999? No. If you did, you need to file Form 1099. So if yes, did or will the corporation file require Form 1099? So I'm going to leave it there because it's no for us. So if the corporation, line 15, if the corporation attaching Form 8996 to certify as a qualified opportunity cost, no. Okay. So Schedule B is done. Form 1120S, Schedule B is done. Form 1120S, Schedule K. How to complete or fill out Form 1120S, Schedule K. So line 1, ordinary business income or loss. It will come from page 1921 and that will be 705. 705. You can see it here. So we'll take that 705 and we will add it to that. Net rental income, real estate or loss. So if you have rental properties, you don't have physical products. Where we came from, you only do the Schedule B and you will do this Schedule K. You won't put your, the income portion of page 1. You won't put your income or your expenses there. You will complete Form 8825, rental property, real estate, income and expense. So they have a form for it, for you to put the properties, the income, the expenses related to it. So technically, when an expense goes to your Schedule K, you are not going to deduct it on your business tax return. It's going to flow to K-1. So if you put an income directly on your Schedule K, since that you are not going to deduct expense related to that income in the business, it's going to flow to Schedule K-1. And some partner may not be able to deduct those expenses, depending on where those expenses landed on their return. And so, but I like the fact that even though rental properties goes to Schedule K, it is the profit or the loss that goes there. So there is a form between Form 1120S and the rental property. So there is that Form 8825 that things will flow to the income, the expenses, and then The profit net rental real estate income loss combine line 18 to line 28 into the result here on Form 1065 or 1120S Schedule K line 2. So that's where that will go. And then the profit or the loss will go to Schedule K line 2 Form 1120S. In our case, it's going to remain blank. So now we can close that Form 1125 rental property form. So, and line 3, we talked about those before. Rental, now related to rental properties, real estate properties. We'll go on line 3, it's going to be blank for us. Interest income, blank. Dividend, blank. So, I know S Corp is now supposed to have passive income. If they have passive income that is more than their active income, I think it can even void the S corporation election. I'm not sure. I have read those rules a while ago, like years ago. So I don't know if that's why on top there is that passive income tax that needs to be paid when we were working on it. Line 22A or something like that. Yeah, line 22A, tax and payment, because things flow to the partners, but for the corporation to pay tax. So what I do for our LLC, tax as an S corp, it does not even have a saving account. Oh, it does have a saving account, but no money goes in the saving account. It just in the checking account, because at the beginning when I have the original business capital stock capital contribution, and the business was not generating revenue, I didn't put in the saving account because I didn't want the natural interest from the bank, because if the business has $0 active income, but then you have money sitting in a saving account generating interest for you, automatically is passive income that exceeding $0. So I didn't want that. Therefore, I just keep money in the checking portion of the account. So, but if you have interest and dividend, they should go on those lines here. And royalties, line 7, natural capital. So, if something applies to you, you might want to read the instruction on it and complete it, because there is some attachment, like attachment D form 1120S for capital gain and loss and all that. So at least there is a form that the income and the expenses will go for the loss to show up on Schedule K. So that's great. So other income. So pretty much we don't have anything for land for Schedule K other than, because our activity was on the first page of Form 1120S. So by the end of that form, we have our profits that we put on line 1 of Schedule K. Therefore, anything else here is not going to be applied to us. There is no charitable contribution, but if you have it, then you have a spot for it. So if you are going to put any deduction on if you have some income here that came straight here, like interest, dividend, and things like that, and then you have expenses you are going to put online on Schedule K, yeah, you can do that, and then they refer to Schedule K1. They are not really going to decrease your business profit, so it will flow to Schedule K1. So credit here, I'm not going to go through those credits because they are now applied. In this example, they have a portion for international business, so we have K2, and then there is a portion for alternative minimum tax. So you might want to read it to see if that applies to your case. And again, if you have things that might go on those lines, it might be a better option to use a tax software to file your taxes, so that the software can just put those information on the forms they should go to, and then on Form 1120S for you. So, okay, and we are just going to continue. and they are talking about items affecting shareholder basis, tax exempt income, other tax exempt, non-deductible expenses. So if you have expenses that are now deductible, they will go there. And distribution, so if you have distribution made to the shareholders, it will go there as well. We didn't have any of those. So therefore, we are going to go past it. So line 17, investment income, investment expenses is other information. So again, and dividend distribution paid from accumulated earning and profit. In fact, that's where that will go because you have distribution here that will affect shareholder. And then you have dividend distribution paid from accumulated earning and profit. You see the way we did the balance sheet earlier? So let's go back to the balance sheet again. So accumulated retained earnings, so if you pay dividend, it's going to decrease what you have left there. So pretty much they are saying that. So you have, again, if you are confused, you can use the tax software to complete it. Why did you take me all the way back here? Because you have two area, and in fact, when you read the instruction, you'll know where between those two you should put it because they have shareholder pro rata share items. So pretty much it continue. That's a continuation of um, Schedule K, but they have things affecting shareholders, and they have this section as well, 17. So we are going to leave a blank. Reconciliation, income loss reconciliation. So they are telling you lines that you need to group together. So pretty much you are going to group the income section of Schedule K 1 to 10, and in our case it's 705, and then you are going to group 12. So you'll notice that they skip 11. Is it true? No, 11. So you are going to take 11, 12, and 16. 11 to, let me see, 11, all 12, and 16. Pretty much through 16. So, oh no, uh, line 11 through, yeah, all 12 and 16F. What does that mean though? Okay, so pretty much on line 16, only line F, but on line 12, you have 12A to D that you're included, and then line 11 and 16F. So if you have numbers on those lines, you use them and you'll take them out of 1 through 10 where the incomes are, and for us it's 705. Okay, that is completed. So we are now required to complete the balance sheet Schedule L or Schedule M1, but we have M2, and I have to say that I'm not very good at completing Schedule M2 in my opinion, but we are going to try. So balance at the beginning of the year, I'm going to use the balance sheet for that. So it's going to be 1308. Let's go back. I just keep now getting out of the line that I entered the right amount. Okay, 1308. Income, ordinary income on page 1921 was 705, and other additions, loss from page 1, we didn't have any loss, other reduction, and combined line 1 through 5. Combine line 1 through 5, you can use the calculator for that. is 705 plus 1308. That's 2013. 2013 distribution known, and the balance is subtract 7 from 6, that will be 13. So, and this number is different from the balance sheet, but I'll have expect that number to match this number, but it's because from prior year I have included the loss in the capital stock, but now I move it back to the retained earning and it changed a little bit, but I don't know. But anyway, that is 1120S filled out. So you complete Form 1120S. Now you'll complete Schedule K1 for the partners. And I'm going to do maybe two to show you an example, but you'll use Schedule K to do that, and they have instructions to show you how to complete it. So the instructions were right there. They say Schedule K and K1. When you are not sure about the line, you can just come here and read it to see what they are asking you to do. So let's get started. Okay. Let me see if I can. Um, okay. So we are going to go to our attachments, and I don't know if you can see, but this attachment that we create a template to use, we have partners in this example, and we are going to create Schedule K1 for them. And when you print it out, you will print the attachment out for the partners as well. So let's take an example. So the template to show you how the attachment will work, you put your business name, your business EIN number, the partner's name, the partner's social security, and the allocation percentage. And the reason why I did that is that way when we enter information, it will automatically calculate it, because those should be calculations here. So if I click here, it's taking data from Schedule K template. So once we update Schedule K that we all did earlier, it will calculate the portion for the partners. And on the Schedule K, it's just for the revenue section of it. So the revenue section of Schedule K, when you update it, it's going to update the partners' income expenses portion based on their percentage. So what we will need to do is we will change the year. So if you design your template well, you can add some formula in some areas so that it can just pull it for you. Because I don't know if you noticed it earlier, it was 2020 here, but when I went to the first one and I changed the year, it changed it here because it had a formula there to pull that arrow from there for me. So okay, and I'm just going to, because I didn't really want to show the expenses when I print it out, I will just hide it. But for us, we can open it to see. So, and frankly, that's all we need. So now let's take the Schedule K1 and let's go to our tax return and open a Schedule K1. So how to fill out IRS Form 1120 as Schedule K1 for 2022. How to fill out Schedule K1 Form 1120S. for 2022. So if you have multiple partners and you are doing this by hand, you might want to enter information in a way that you can save it as templates, and then you can open one, save it as one partner's name, and just update what goes for that partner. Does that make sense? So for instance, you will add the EIN number, your business EIN number, and the business information. Let's just copy it. Okay. And the address. I think it's been faster if we tap this though. Uh-oh. Okay. And then the city and state and zip code. Okay. So which IRS center is this form will go to? We'll go to page 8. In fact, page 3. So while we are here, let's talk about where to file Form 1120S. To file to where to send or to mail your IRS Form 1120S for 2022. So you first locate your state, and then you read the column. So total assets at the end of the tax year. If the item F, your total assets, is, you look for where your state is any amount, then you look for the address. So the address in the address column that correspond to the assets that correspond to your state, that's what you will use. So we are going to copy that bottom. In the past, I just put the city Ogden, but I'm going to put that full things because there are some Ogden as well, but the zip code is different. So I'm going to use both. Okay, so corporation share. In the past, I have left it blank, and that's a new thing that came into play in 2020 or 2019. It was not there before. And then in 2021, they added for shareholders. So in the past, when I have come across it the first time, I just left it blank. But this time, I'm just going to put 100%. So let's go back to where we were before. And again, if you do not understand something, try to find it in the instructions and read about it. Sorry. Okay, so how to complete Schedule K-1. Let's look for that attachment. I believe it's G, right? So okay, item D. So report the total number of shares issued and outstanding at the beginning and end of the S corporation tax year. An entity without stock, such as an L.L.C, that means they are aware of it, should enter the number of units or other equivalent of S corporation stock. So round the number to share to the nearest whole number. So I just put 100%. Okay, so let's continue here. But again, yeah, if you know the number of share of your stocks, you can add it there. Okay. Another common stocks, usually they are valued per cent per share or something like that. But anyway, okay, so now you notice that we have some information in the things. Shareholder identification number. When you have more than one partner, you might want to leave it just like that for now. And let's say all your partner are living in the same area. Of course, if those officers are working in the business, they might live in the same state, right? So let's assume they are living in the same zip code. Then what they have in common, you can put it there, and you can just leave, the name section. So pretty much you're trying to see what they have in common, and you can add it. At this point, you can just save it if that's all you think they have in common. You save it, and then you open it again, and you save it with the name of the partner. Does that make sense? So this one, that way you can just have that template that you can use for all the partners. So for this one, I'm just going to continue. In fact, I'm going to do two. So I'm going to save this one. Let me see here. I'm going to, no, it shouldn't have done that. So I'm going to just save it so that it's saved as a template. And now I'm going to save it uh, using my name as an example. Let's see here. Okay, so I'm going to save it. And while we are here, I can explain a little bit. Um, you know, those type of form that you are going to print out together. So you have your form 1120S, your form 1125A, your schedule K-1, and your form 4562. So if you know the order you should print them out, you can, while you are saving those forms, as you file your tax return, you can even put a number next to them like 1, 2, 3 in the order you should print them and organize them. So we'll talk about organization later. But so while we are here, let's just go through that. Okay, so, and if we go back to our this partner, we have 44%, then we will go back to that form we just saved for the partner, and you will enter the partner's social security, and you'll enter the partner's name and the percentage of shareholder 44, and then we have shareholder numbers of and frankly I like to just put the same percentage back down there, but you can read the instructions. I don't know what item is that. Okay, that will be H. So report the number of share of allocation item, income, loss, or deduction in the beginning and year end. Any entity without stocks such as L.L.C should enter the number of units or other equivalent to S corporation. So, but now below zero. So, and then they give you an example there. But anyway, you can, but yeah, read it to see. But anyway, I just like to put the percentage back there again because the percentage didn't change. Okay. So if you have two partners with the same ownership percentage, then you get it to there before you save the template, and now you add the in fact, yeah, let's say that you have two partners that split a 50-50. You add the percentage, and then you add the income, and then you save it as a template, and then you save it again under one partner name to add the name. Does that make sense? And that way you are not going to type in a data twice. So this time is what, 310. So we'll add 310. Because I'm going to choose two example, I'm going to use two different um, percentage. So 310 for line 1. Line 2, we didn't have anything on our Schedule K. So if we go back to Schedule K, we only have number on line 1. So where you have number data on Schedule K, you'll find the corresponding on Schedule K1. So you notice that we only have one entry on Schedule K. Therefore, we will have one entry on Schedule K1. So that's pretty much it for this partner. So we will save it. But let's scroll down. So you have boss 1, boss 2, boss 3, and boss 4. And you can see, those arrows, they just match your Schedule K1. Why you keep sending me backward? We are going forward. Okay. Okay. So, line 4 interest income correspond to boss 4 interest income. So, but the partner portion of it. So, if you have 100% on Schedule K, the 44% of that will go to Schedule K1 for the partner that is 44%. I don't know if it makes sense. So, and you can just read through it, and frankly, nothing here. We are not going to make any more entry here, but you can see that line 16, 17, we have those on Schedule K as well. And then they have more than one activity for at-risk purposes, more than one activity for passive activity. So I usually just don't check anything there, but they say see attachment. So you can read the instruction regarding it. But this one is done. So we are going to close it. And then we are going to bring the templates. And we are going to choose another example to let's take this one. It's 4%. So and it, and it's just 4% of Schedule K pretty much. So you see the 703.75, 703.75 times 4.04, see 2815. So 2815. So 44%, that's what was 310 that we put on Schedule K1. So for this one, again, if you have multiple that has 4%, you can create a sub template as well by entering 4%, 4% in this example, 4%, for line for item H, and then 2815. We'll put 28 in box 1, and then we'll save it as template. And then we will save it again under the name of the person we want to file this for, and we will add the person's name. That makes sense. That way you have the percentage saved in, the dollar amount saved in, and you just need to change the portion of the form that will change for each partner, if that makes sense. So the way Schedule K1 works is when you total each one of them, it should total to Schedule K amount. So let's use this. So one person, one partner, 28. One partner, 28. One partner, 28. One partner, one partner, 310. One partner, 310. It gave you 704. So, and we have 705. Again, rounding. So, but you get the point. So that's how it works. So you have to make sure all your schedule K1 total to Schedule K. So now we are done completing or filling out Schedule K1 Form 1120S. So how do you assemble your Form 1120S? So there is instructions. I will say it is form is page 3, page 8. Let's try page 3 of instructions for Form 1120S. So when Form 1120S is due by March 15. So, and who should sign Form 1120S? The president, the vice president, the treasurer, the assistant treasurer. So pretty much the officers and the partner of the businesses that are working in it. Cool. But you can read it to read about it. So, but what we are looking for is how to assemble the document. So you'll find that on page 4 of IRS Instructions for Form 1120S. So you'll have all the 5 pages of Form 1120S print out. Remember, you sign, you date it, you make copy for your state, you make copy for your business record, and you have the original copy for IRS that you sign. And you'll see the form that you completed during the process, and you need to print them out and add them in that order. And the one that we come across that we recognize is Form 1125A. So what I was talking about earlier here is, do you see this one, this where we have that I can just create a folder in this tutorial, and I can just say read it. So we are going to take Form 11, and I don't even think it's going to allow us to copy it. So because we still have it open, so let's go back to our form, and let's save our Form 1120S and close it. Let's save our Schedule K and close it. And let's come back to our form. So we will take the form 1120S, the K1, the depreciation, another K1, and I'm just going to cut them, and you can just say ready to we can just call it 2022 Form 1120S filed. So it's not necessarily the way I will label them though, because well, I'm just giving you an idea. So when you go under Form 8, when you go under your 2022 task folder for your business, you can have your state folder, you can have your state folder. You can have your state folder, you can have IRS folder. Inside IRS folder, you'll have multiple folders. One for Form 944 or Form 941 Employment Tax Return, another one for Form 940 Unemployment Tax Return, another folder for W2, W3, SSA, and then another folder for Form 1120S. Does that make sense? Yeah. And then under the state, you'll have the different folder for the different forms that you file with your state. Why did I copy a bank account here? Okay. So it seems like I copy more than I wanted to copy. Let's just cancel it. Okay. So this one, I have those documents opened. So I should be moving them around like that. So let me save. We'll come back to this though. So that one was good to move. Because it's a tutorial, I have a lot of things in that folder. I like to move the forms out of there so that we can organize them. Okay, but we don't need that. We don't need this. We don't need this. And we can just cut them back. And we can put them back here. Okay, but we do need this one. So I'm going to, I'm just going to copy it. And I'm going to paste it here. And I don't know why I have, oh, the article car. I'll put it back here. So we are going to go get the Form 1125A. Can copy that. So based on how they say to organize it, we can now label them if we want. That way, so we know for sure we have that one first, we have this one second. Okay, and then we can go back to the instructions to see. So we have 1125A, they say Schedule K-1 will follow. So if you have a rental property, so your rental property will come before cost of goods sold will come. So Form 8825, they have that as well. So if you have Form 4797, we talk about it when we were talking about the page 1 of 1120S, the first part, they have under incomes, they have that form there in case you have some sale related, some recapture from section 179, and I mentioned it there. So that will come before as well. You have schedule D, that will come before. So you have to see what applied to your business. Other form that you completed. But in our example, we have 1120S, Form 1125A, we have Schedule K-1, and you still need to know what is form, what is schedule, because they are, so Schedule K-1. So let's go note Schedule K-1. So we have two Schedule K-1 in the example, so they are going to be third. So, and I'm just going to have both as third. And then let's go back to the instructions. So, and then additional schedules in alphabetical orders, including K2, K3, and things like that. So, additional form in numerical orders. So, we have a form that didn't list 4562 depreciation and amortization. So, we are going to add it as the fourth one in the list. Okay, so we'll go back to the instructions and they say complete every applicable entry space on Form 11S and Schedule K. Don't need to see attached. So, okay, if there are supporting statement and attachment, arrange them in the same order as the schedules or form they support and attach them last. Okay, so that means when you print, now let's open. So when you print your 1120S, you will print to your Form 1125A, and you will print three the Schedule K1s. You will put them in the back, and then you will print Form 4562 depreciation and amortization and add it, and then you go to the attachments. In the attachments, we have Schedule K. So that will come first because that one has, and I think that's the way I will print it out. And it has a supporting document for the first part of 1120S on top, and then it has a supporting document for line 19. So it's a supporting document for Schedule K line 1. So if I recall it like that, that's what the first one is, and then it has supporting document for. In fact, it would have really been a good idea to put page 1 from 1120S like this one, this bottom portion, to put it on top and put Schedule K1 at the bottom. Does that make sense? Since we come across this deduction before we come across this session. But again, Form 1120S talk about income. So page 1, I should even put Form 1120S page 1 line 21 instead of just putting page 1 line 21, so that it shows that it's referring to Form 1120S. But anyway, so but it's supporting the income on Form 1120S line 1, income, the profits, and then the way we broke it down. So line 21, technically it's line 21 and Schedule K line 1 that is supporting. So it'll be good when I say Schedule K from line 1 in parentheses, it'll be good to put, I don't know, it just feel like it's going to be a duplicate of page 1 line 21. So I'm just going to leave it like that. So anyway, but yeah, we have that number, and then we have page 1 line from 1120S line 19. You see the way I say, as I put it like this, that's what I'm trying to put back here, but it's just going to make that arrow too long. So, and I don't know why I call it Schedule K though, because it's supporting from 1120S, but I'm going to keep it like that. But anyway, so this will be the attachment that will go behind all the document that we are putting together in our brain. And then what else we need to print out? The K1. So we'll print the K1, and then we'll print the K1 and we'll add it. And those K1s, you'll make three copies. One for IRS. You see the way we have been putting things in our like imaginary space here. And then you make another copy for your business record, and then you make another copy that you'll give to the partner. So you'll give them their K-1, and then you'll give them their K-1 attachment. So see the way we have been printing things out. When you are printing 1120S, you print it 3 times. Your state IRS, the original one that you sign, you make copy for IRS, and your business has 3 of that form. And then you print K1. K1 you print 3 times for IRS, for your business, and for the partners. And then you print your balance sheet for your business record, and you print the attachment as well for the IRS and for your business record. And yeah, so that'll be 2 attachments, 2 copy for Schedule K supporting document, and the attachment for the K1 you print 3 times for the IRS document that we are putting together, and then for your business record, and then for the partners. So once you have your document ready, you can go through them, and then you locate IRS address where to mail your tax return. You put that on the envelope. You put your return. You attach them and put them in the. You check assembling return to make sure they are all well organized, and then you put them in the envelope and you mail it to the address that is supposed to be mailed to, and you mail it, you assemble it based on that order, and you mail it via USPS with a tracking number well before March 15. So, and you have the address here. So that's how you fill out Form 1120S. That's how you fill out IRS Form 1120S for 2022. Thank you so much for your time. It has been a long tutorial to go through the process and do it by hand. I will include the link to the video how to fill out Form 4552 Depreciation and Amortization, how to fill out Form 1125A Cost of Goods Sold, and you have ninasoap.com that you can visit under free download for for templates that you find useful for your business. And I will add the bookkeeping spreadsheet. It's not here yet. I will work on it. I have one that I'll put there, and I made some adjustment this year, but I won't put that there yet because I have to clean up numbers out of it before. So the one that I used last year throughout the year, and I clean it up to have a clean template, I'll add it to the free download. And a lot of time when I'm filing taxes and I'm seeing, I will say, okay, what else can I fix to make it easier? Does that make sense? And then I made those few adjustments. So as I made those few adjustments, if that's a free download, I will just add it to the free download so that you can see them. Because there are some templates that I have used when my business was simpler and I didn't have them here. I wish I have added them as in on our blog, because now I have to go back to my old folders to find them and clean them up. But those spreadsheets will be easy for a company that just started and didn't have a lot of income, or have zero income, though, or have few transactions, expenses, and income. Those will be simpler to work with. But as the business is evolving, I'm changing the spreadsheet uh, to um, to fit my name, if that makes sense. So those are spreadsheet that I I want to put here as free download. And when you go to ninasoap.com, the blog, you don't, if that's your first time, you don't need to register. Although we'll be happy to have you join us, you don't have to register to access those spreadsheets. And one of them is going to be the bookkeeping, inventory, and sales spreadsheet is already there, and we have two versions. But the bookkeeping is going to go there, and I made a few adjustments to it, and I'm going to add it later. And I don't know yet about the the attachment templates. Yeah, probably will clean it up at some point, and I will add it there as well. But anyway, by going through a review, it gives you the option. If you need to add an attachment, you will have an idea how to design one for yourself. And I like to, those things when you print it out, it will be like a Word document or a PDF document. And in fact, I like to save them as a PDF version because um, for record purposes. So if we, I'm not sure this one has been formatted um, for that, but yeah, for those spreadsheets, it's good when you are using them to save a PDF version. Yeah, it has been formatted so it can fit on one page. And when I click, like I'm going to print out, I can just select my PDF version and I will save it as a PDF. That way I have, a PDF version of the spreadsheet, because spreadsheet can change if you click on something and change and put a number there. So I like to have a PDF version of it. It's not easily editable by mistake. Does that make sense? So, but yeah, some key form or some key data, some key let's just call it data. I like to have a PDF version of it, but I like to design those in a spreadsheet so that I can use it as a template and just change the numbers and the totals will calculate. I don't have to actually calculate those every time, every year that I'm making changes to it. So that's one way to increase productivity in your business. If you have to do some stuff yourself, you have to find a way to be able to do it faster, save time. You take a lot of time to do it once, and then you know that again when you are going to come back to it, it's going to be faster because you make a template out of it. Does that make sense? So thank you so much for your time. We thank you very much, you all that watch our videos. We thank you all that subscribe to our channel. We thank you so much for all your comments. Thank you very much for your time. And I will have our free download link in the description. Um, the IRS links, the links to IRS forms, I'll have the links in the description, or when you come to ninasoap.com, which will be in the description as well. That's the blog. You